as much as what we saw whenever the market opened, $93. We're at 89 here. It's a decent price going into earnings, though. So we have. Oh, I didn't even have it on screen. My bad. We have Coreweave tonight. I'm invested in that name. We have it in the stock draft. I think Steve has it in his draft. We've got Lumentum tonight. I've got that one in my draft. I have that in my personal portfolio as well. SMCI I have in my draft, not in my own personal portfolio. But obviously, I want to win this game, which is essentially just a fun game amongst friends. Doesn't mean that I don't want to win it, though. You know, I'm here to win. But ladies and gentlemen, I'd like to welcome one of the greatest guests that we've ever had on this show's history. The truly powerful and amazing Neil, Couch Investor.
It's always nice to come on here because I always get like the best introductions out of everyone.
Dude, some people come on and I'm like, whatever. Tevis is coming on.
Fellow Canadian.
No, I love Tevis. It's funny because that's like one of the only people in the background, or that's not in the background today. So I'm like truly talking behind his back. So my apologies to Tevis. I love you, brother. Ladies and gentlemen, welcome to other guests, Steve and Jose. How's it going, boys?
It was going okay until a minute ago.
Yeah, no. The great and powerful Jose is here, and Stephen Fiorillo.
What's going on, everyone?
The mafioso himself. You done all your criminal activities, Stephen? Your Fiorillo crime family is done. You're ready to get back to your investing world?
I have no idea what you're talking about.
All right.
Spoken as a true criminal.
Okay, Roy's going to be here soon, but we're going to have a full cast here. All here to discuss a company that, Neil, I don't know if you had this before, Jose, but I think, if I'm correct, Jose was maybe the first investor into Coreweave.
Yeah, I decided to go with the better one, Nebius.
Yeah. Okay. Do you have any Coreweave?
Yeah, no, I do have Coreweave.
Okay. But Jose, you've started this cult. Are we about to lose money?
Hopefully not. And if it is, we just wait next quarter. It'll be all right next quarter.
You'll be responsible for what happens.
I'm pretty excited. I mean, we got some great commentary all around. And I mean, management called this the inflection point where there's the velocity. I forget what was the actual term they said, but where the velocity is, you can't stop this anymore. Now that we're at 1 gigawatt, and yeah, pretty excited from all the commentary we got just from SpaceX last week, and then the hyperscaler. So I'm pretty excited about earnings, and yeah, hopefully we finally get some love on this NeoCloud player, which is not just a bare metal play.
Steven.
Yes, sir.
You picked this name in your stock draft. You have it in your own portfolio.
Yes.
You've turned quite bullish. Why are you excited about earnings?
Because I think everybody's wrong. I think the market's wrong. Coreweave can obviously afford the financing on the debt. It doesn't matter if they don't make money this year or next year. It matters what happens in the future. And when you are growing the way that they're growing, the EBITDA crossed over $1 billion for the first time in 3 months. So I want to see triple-digit revenue growth, and I want to see RPO at 125 billion or more.
Wow, 125.
Well, we're coming into the quarter at 99.
I know, but I hope you're right.
Well, I said I want to see, not that it's going to happen.
Got you. Neil, if we get 125 billion of RPO, is that going to make a difference to the street, or are investors focused on something else?
Unfortunately, even if they post $150 billion, as long as they cannot show margins inflect, it's going to go down, because that's what Wall Street wants to see, and that's what they told us 3 months ago, right? Is that margins are going to either flatten out and then recover. So even if the backlog is much higher, unfortunately, Wall Street is just focused on, can you improve your margins? And if it's yes, then great. And if not, then hopefully they have an explanation. And maybe guidance is going to be better than this quarter. That's also fine.
Yeah. We were taking a look at this page right here. I'll sort of show this to you guys. Coreweave, in the last 5 quarters, 24 hours after, meaning the results for the day after earnings, has been not so green. You can see that in this column here. Last quarter, we were down 11.4%, 18.5% the quarter before, 16.3%, 20.8%, and down 2.5%. Now, the stock is above its IPO price. This might make it seem like it has never gone up a day in its life. But the earnings reactions to Coreweave is pretty surprising. Do you think that this quarter is going to be any different? I'll give this one to Jose.
If we really see kind of that inflection point on margins, I think it could be different. And I mean, is it where now the market is expecting this to go red and it's always the opposite of what the market thinks? I mean, 1 gigawatt of power is a lot of active power. I want to see where we're at this quarter. I do believe the RPO doesn't really include much of the Anthropic partnership that they have. And I think this quarter, they also announced a few other big players that they have some new contracts with. So I actually don't see it. I think it's very possible to get that $125 billion of backlog. So if margin changes and we continue to see a nice growth in active power, I think the market would be pretty happy. And especially if they tell us commentary on pricing continues to go up, models have gotten better than we originally projected because of the pricing of GPU. I think the Wall Street would eat a lot of that. Unfortunately, the CEO is a lot like me. He stutters a lot and he repeats a lot. And sometimes the market fears that and feels like that's a sign of weakness. I just think he's just like me, a horrible speaker live. But if you can go against all the that he's going to go with, I think we're going to have a great quarter.
It is a lot, by the way. If this is the first Coreweave call that you guys are about to listen to, this is like the movie The King's Speech. I mean, he truly is not a great public speaker, but the content that he actually is saying is very important to listen to. Neil, do you think that's going to affect the stock, or do you think people have sort of gotten to get to know Michael?
I mean, if Wall Street got through all the Elon Musk earnings calls throughout the year, I think they'll grow through this one just fine. They did say last quarter that they expressed strong confidence in sequential margin expansion for the remainder of the year, with expectations for adjusted operating income margin to return to low double digits by the 4th quarter. So again, if we do see that already right now, I think the stock will pop.
Steve, do you think we break that trend of sell-offs?
Selfishly, I wouldn't mind another opportunity to buy more at 60. I mean, look, this isn't something I'm in for 3 months. Something I want to be in for years. And as long as I see that the EBITDA and the revenue is growing, the backlog is growing, I'm not worried about margins and I'm not worried about share price. Would I like the share price to go up? Yes and no. Selfishly, for the draft, sure. But I'm not done buying. So I really wouldn't mind buying a better company at a lower price.
Now, the next morning, we have Nebius. If you were to put these two up, which one do you think is going to come out with a better stock reaction? I hate to pin two amazing companies together. I own both. But Jose, you seem to have some commentary there.
Yeah, I mean, I think the market is weird. I'm going to go with Nebius, but I'm a huge Coreweave fan. I think one day the market will wake up to the strength that Coreweave has, but Nebius is definitely the loved one in this relationship.
Neil, any commentary on what we might see for Coreweave that affects Nebius?
On the positive
Or-
side,
or
again,
vice
on the
versa?
positive side, it's the same. I think if Coreweave does have an inflection this quarter, the stock is up a significant amount the next day, and will continue to go up over the next couple of days because it's been underperforming, let's say, Nebius year to date, and so once it gets unshackled or whatever, I think the stock just runs. If there are delays and things like that, maybe there are some questions about the anti-data center sentiment. It could definitely affect the Nebius because Nebius has the same issue in Violent. So, but I guess we'll hear about that 15 hours from now. So, not that long to wait.
No, it really isn't. We're going to see a lot of neoclouds in very quick succession. Way more capex. The range on capex for Coreweave is incredible. I think Wall Street has it anywhere between $6 billion and $14 billion for capex on Coreweave. Do you guys have any expectations of where that's going to be, or just sort of along for the ride?
How much did you say?
Between here, I'll pull it up. It's between $6 billion and $14 billion for Coreweave.
Oh no,
in capex.
Okay. Yeah, 8.4. Last quarter they did more, right? So
they're trying to finance quite a large build out here.
I mean, if your backlog is $100 billion, you'll have to spend to reach it.
Yeah, a lot of that backlog is long term though.
Yeah. Plus there are some prepayments and bring your own booze type of thing.
Look at the spread here. Between 6.37 and 14.2 billion in capex. There's no consensus. I mean, there is consensus. It's 8.4 billion, but like that's a wide spread.
Yeah, I think for most players, we have heard that the second half is going to be more of the weighted side for capex. I wonder if people are just truly waiting for Vera Rubin solution. So I would say maybe we're at the midpoint on this capex for this quarter, and I think from the rest of the year out, it's just going to be insane for September and December quarter.
Yeah. Do you think that the NVIDIA $500 billion financing is going to play a role for the neoclouds, Steve?
I think it's bullish for the neoclouds. Coreweave and Nebius may be able to more Coreweave. They may be able to refinance some debt at a better price, expand margins that way a little bit. Ultimately, I just think that the Alphabet call is the most important, not necessarily what NVIDIA came out with yesterday. Because if Alphabet is going to rent from third parties, it just shows you how much demand there is out there. That's why I really want to see the RPO number.
Now, we haven't really seen, I mean, aside from SpaceX, obviously, but we haven't really seen a contract be signed outside of Google, unless I'm mistaken. But when do you think we start seeing Google partner with new neoclouds?
I think you'll see it in the next earnings call.
I think Google is part of CoreWeave's customer. If you go to their website, you would see Google Cloud. I just don't. We've never had a publicly announced customer, but you do see Google. And in the prior earnings, they've talked about having kind of a hyperscaler that they never really mentioned the name of, and many people believe it's Google.
Roy, welcome, brother.
Hey Tanner. Hey Neil. Jose. I don't think we've interacted before, but I've seen you around. Steve,
the doctor is here.
Yeah, you were a maybe, so I'm glad to see
you. Brother, we've got Coreweave coming up. This has been a big position of focus for you most recently. What are you expecting for this earnings? Just give us a little bit of a roundup of what you're expecting.
Yeah, I mean, it's going to be a really good, solid quarter. There's, I don't. It's a question of what, as far as the stock price reaction in the short term, what the market's looking for. If it's focused more on like the capex and the debt, and that's just going to be the story, it's going to look at this and be like, well, there's more capex and there's more debt. Surprise! I mean, obviously not. The backlog is going to be massive. we're looking at probably somewhere close to that 40 billion amount that they gained in the previous quarter. There, and so it looks like a lot of these projects too. If you look at APLD and Galaxy Digital, which they rent campuses out to Coreweave, those projects look ahead on time and very, very good. So they definitely should be beating on revenue. EPS will probably be a miss just because it's a function of that being ahead of, or at least on time of the build out. And analysts have done a fairly poor job at predicting that, as well as like the capex is just like a wide range. I hope that they also, in addition to that, talk about the margins. They've talked about in the past that the inflection point will continue to increase starting next quarter, and so hopefully they'll continue to say, hey, this is on track. And again, with the campuses, we don't want to hear like delays. I'm sure that they'll touch on like the moratoriums, which doesn't affect them in New York. Maybe they won't mention that at all. But maybe the pause in Texas, obviously it's not going to impact Coreweave. They already have approvals. That's one of the benefits of what they've been doing. But what will the stock price do? Well, I hope it's not like the previous 3 or 4 quarters. The first one was, went up, and then the other ones were down. But we're also trading at a much more conservative level compared to those previous times. So I'm in this long term. I would be surprised if there's anything in here that like really changes the thesis meaningfully for me either direction. But yeah, the market has a lot of misperceptions, so hopefully they start setting the records straight.
Neil, do you think any of the moratoriums, what New York's doing, anything like this is going to affect not only Coreweave? I want you to speak on that, but then on just the sort of data center build out in general.
I mean, the sentiment around data centers in the US, actually in Europe also, it's not the great, but there's, I don't know if it's someone or some companies or whatever pushing the anti-AI sentiment, or just plus misinformation about all the damage it is doing to society and to cities, etc., which all these companies building data centers, they could all do a better job explaining what's going on. For each neo cloud, as long as you have like a good portfolio of data centers that's spread out, I think you'll be fine. I don't think it should be affecting your long-term success as a business, unless all of your data centers are in New York. Then I guess there is going to be an issue. But yeah.
Yeah. Steve, a man of New York. What's going on over there, huh?
I live in one of the stupidest states, and everybody knows my opinion on this, and I don't pull any punches. These politicians have lost their minds. Now, can we do a better job at policing data centers? Maybe. But you cannot stop the AI build out. This is a national security. This is American exceptionalism. This is American ingenuity. And quite honestly, the S&P 500, the largest companies in the world are American companies. You want it to stay that way? You cannot lose the arms race to China. And I got news for all the politicians. They stop AI build out. China's not stopping. They have no red tape putting up nuclear. They have solved the energy bottleneck. And we will just cripple ourselves if we go down that road.
Now, by the way you talk is like a politician, and I've got news for the politicians. It's it is great to listen to. What do you guys think about some of the other names that are reporting today? We've got SMCI, we've got Lumentum. Maybe some of you guys have commentary on Kava or Firefly or something like this, but I want to go around and hear about some thoughts. You guys can pick out a name out of that list, or maybe some other ones that I didn't include, to let me know if you're paying attention to that, what we should be looking for. Jose, I'll start with you.
Yeah, I mean, I think the one I follow the most while I don't own is Supermicro.
Okay.
I know obviously you have kind of the scariness of all the lies or kind of accounting issues that they have. They did increase their guidance for the long term dramatically. I think they mentioned just this most recent quarter, they achieved near, I forget the actual number, but like $40 billion plus of new net orders of the overall AI market for AI servers. And to me, that's what I want to hear. While I don't own the stock, commentary on that. What is driving this demand? Is it new power that's being built up? Is it new solutions that are happening in the AI market? Is it just the demand for Reva Rubin? Is it the demand for Helios? What is really driving this massive demand that kind of seems to be appearing for at least them out of nowhere? Or was it that NVIDIA was not giving them enough supply before, and now they feel comfortable with the supply allocation that they can kind of take some of these orders? So that can help me understand more of the commentary. But Super Michael, while if this one was a stock that was good with what they reported, I would actually like it at these valuations. I think the scarier thing is that risk of all the manipulation and weirdness that happens with their financial side.
Neil, which names are you paying attention to? And
the only one is that I remotely follow is just SMCI, although I don't really care that much. But what did they say the last time they released preliminary results and margins were just much better than previously feared, I guess. So
yeah, I think it was something that I forget. I don't have it in front of me, but I think it was something like 11 to 12 billion in revenue, higher margins.
So yeah, 11 to 12.5 billion, and non-GAAP is 15 to 17, better than the 8.2 to 8.4% that they.
But this was recent, right?
This is from July 21st. Yes.
Yeah. So after the quarter had happened.
So yeah, three weeks ago or something. Yeah.
So
I guess it comes in better than expected, but yeah.
That margin expansion is dramatic because I think it was almost like 50 to 75% versus where they were at before. And I'm curious to see what's happening there. Are they just serving? Is the demand coming more from enterprises now? Is the enterprise market waking up? Because as we know, the hyperscaler for them tends to be a very low margin business. Or are they able to sell a lot of, maybe they were overstacked with older chips? I know that they had a huge inventory of like H100s and H200. Is the demand so crazy that now they're just like unloading those older generation chips at a way higher price than they originally thought they would? So commentary on that is also something that should be important for the whole AI industry.
Yeah, it's a good read for that. Like it's kind of challenging just because all of the stuff that Jose touched on, just can you actually trust the leadership at this point, taking away what would be a very good, respectable company with a very good product, but you can still like read into the space. Like for me, I would say Lumentum I'll pay a little bit of attention to just because it's interesting what's happening in the silicon photonics space. AAOI already reported, but there's several others as well. And that's probably like the second most important, maybe third most important to look at. So I'll be interested to see. But my question is there really any other stocks reporting other than Coreweave today? Because I'm not sure about that.
Okay. Dude, Lumentum's a sizable business. Okay, I don't want to hear this. No commentary on Lumentum, though, from you guys.
SMCI or bust.
SMCI or bust.
So like silicon photonics is like definitely heating up, and like how fast is anybody's guess. There's some companies out there that are like, hey, this is happening soon and rapidly, and then there's others like, yeah, we'll have to see. You know, that we got some leads here and there. Some of that speaks to like the quality of the business. Lumentum is one of those that I think will be, you know, whatever that they end up saying as far as with their updating numbers, projections. I don't remember if they do guidance or not. That one I would listen to a lot more closely because it's not like some little tiny business that has like one or two little products. It's not been a business in this space for a while. So, but they're very excited about what's happening, and that really is like there's so much that silicon photonics impacts, including our data center place. There's a lot changing in this technology rapidly.
Yeah, Lumentum does show off guidance. So we'll be able to compare pretty strongly against what they ended up calling for. They're not as big as Coherent, which shows off earnings tomorrow, but they do have a pretty good product mix that's more focused on the things that are like growing really, really aggressively, like CPO. So I don't know. I'm interested to see who ends up benefiting the most, but we have Coreweave here running a little bit up 2% going into earnings. I don't know if that's a good sign for what we're about to see, but earnings or the market's going to close in about 2.5 minutes here. Let's see a list from you guys. Let's go around the clock. Which company is going to have the largest pump? I'll look at the four names: SMCI, Lumentum, Kava, and Coreweave. What do you guys believe in? I'm going to put up a poll in my chat as well. Neil?
Out of those three,
4. Don't cut out Kava. Real business.
I know. Apparently,
Okay.
the food is very good.
Have you had it?
No, but I think you had it, or you commented on it, or maybe someone else. But everybody's like, "Oh, I love it. The bowls are amazing." Blah blah blah.
No, I'm a Chipotle guy. Look at this little rip from Coreweave going into earnings, by the way.
The implied move is what, 14% for Coreweave?
Yeah, that's right.
I think.
Yeah, probably to the downside.
Stop it.
If
Get
you look
this
at the
guy
past
outta here.
earnings, dude, there's no denying it. It's gone down every quarter.
Not the first one.
That's not what I'm seeing.
I mean, the fact
No,
that it's
it's-
green before earnings is like putting us a little bit under pressure, but I'd say it goes green, Kava slightly green, Lumentum I don't know, and Super Micro probably green as well, just because we already know what's coming.
This is what I see, Roy, is the first 5 quarters were all red post earnings.
So we break the streak.
Oh. No, I thought the first one. I don't know. I double checked that. I don't think that.
It could be a different time horizon. I think this is first 24 hours or something. But still,
Yeah, I think it was market close. Like the first one was positive, and I think after hours or like macro or something. But yeah, historically. But like we just saw with Palantir last week. People are like, "Oh, the stock never moves" because they forget what happened like a year ago, and bam, it moves up 30-something% in a week. Nvidia will do that at some point. Don't know if it'll be this earnings or not. Coreweave at some point will break the cycle. SoFi will break its typical thing just because the stock has always done whatever. It's not a automatic self-fulfilling
Roy, can I cut you
prophecy.
off real quick? Market closes in 5 seconds, ladies and gentlemen. Coreweave up 2.4% as we're going into this close. The market is officially closed. I don't have a bell. Maybe Steve can ring his, but SMCI, Kava, Coreweave, Lumentum. These are the names that we're going to be focusing on. I mean, it's truly sad, but hopefully the numbers are not. And let me know if you guys get the numbers first. Sorry, Roy, go ahead.
Yeah, I think that's all I was gonna say. There is just because it's always done whatever. It's not a large sample size, and even if it was, it's not really that meaningful.
Got you.
Yeah, with Coreweave, one thing I am excited is management has always been very conservative on kind of like their software numbers or software revenue and kind of any of the addition stuff. I think for guidance, even for the full year, they don't have much of it. Maybe now as we're getting closer to the second half starting already the second half of the year, maybe we can get a lot more clarity on some of the additive solutions that they have as well. So pretty excited about that.
Kava starting the pump here up 2.7%. First name to really move in the after hours. Most things are green in the after hours, up about 0.5%. But we don't have any numbers just yet. Hopefully everyone is looking here. And Neil, if you find the numbers, I don't just want to see it in private chat. I want you to say something.
Yeah, I'm ready.
I should get to the right page.
SMCI up 1.2%. Everything's green though. People are feeling okay.
Final last words.
Yeah, I know. I shouldn't even have said anything, and I apologize.
It's all going to be your fault.
Yeah.
So I know Tanner and Steve are shareholders. Neil, you're a shareholder with Coreweave, and then Jose, are you? I know you're big in Nebius, so okay. Yeah.
Other way, huge in Coreweave. I have no Nebius position.
Oh.
Coreweave is my biggest cost basis position in my portfolio ever.
Yeah.
He is the original Coreweave bull.
Dude, okay, yeah. I have to interact with you more than that. I think it's my second largest position right now. So
I'm happy to talk, cry, laugh, depending on how the market reacts.
But why not both? ¿Por qué no los dos?
Okay, I don't see any numbers just yet. And the markets are also not reacting too strongly to anything just yet. Even Kava lost its growth. So we're just sort of waiting.
While we wait, have you guys seen the Grok AI agent? I haven't watched it, but I don't know
The
if you
Grok
guys...
bot?
Yeah, Grok bot. Is it
Yeah.
something worth watching right now?
Oh, I mean, if you have Cursor Ultra or Grok Ultra or something, you have access to it for now, but it is in beta mode.
Okay. Nothing out just yet.
Some of the space names actually recovered quite well today, other than SpaceX. I think that one was down 3% or so, but AST, Rocket Lab.
Lumentum numbers are out. Wall Street wanted earnings per share of $2.97. We got $3.23, beat on EPS by 8.75%. That was up 267% year over year, by the way. Revenue grew by 109% year over year, beat by 1.88%. That's a double beat from Lumentum. That's what we have so far. Revenue grew 109%, though. That's up 24% quarter over quarter, and EPS grew by 36% quarter over quarter. I own that name in my portfolio and in the draft. Stock is down 2.3%. Oh, investing's a hard game.
Yeah, it's one of the reasons why I don't play earnings. I just, long-term investor, because you have to be right directionally in addition to whatever you're expecting. So,
Yeah.
When I was brand new, I was like, no, I know what the numbers are. They're going to be great. And they were, and the stock would dump by 10%. I'm like, okay.
And at that time, you would blame market manipulation. All those market makers.
Oh, yeah.
Yeah.
Yeah, they're all out to get you. Your little $1,000 portfolio or whatever.
Wow, Q1 guide on Lumentum, huge. 1.2 to $1.28 billion. That's a really big growth story. I don't know what they're seeing in the numbers right now. Maybe it's CapEx. I don't know what they're seeing just yet. We don't have the numbers, but the market does not like what Lumentum is showing off right now, down 3%. SMCI up 6%, 6.3, 7%. Oh, Steve, I won the draft, bro. Come on.
From last to first, baby.
From last to first. This is
And if SMCI is good, hopefully Coreweave is good.
So
Hopefully Coreweave is
SMCI
good.
full year guide $65 to $72 billion versus $52.5 billion estimated number. Adjusted EPS 1.7 versus 1.59. And revenue did miss by 4%.
Yeah.
Came in at $11.56 billion, but it is up 93% year over year and 9% quarter over quarter. EPS is up 315% year over year.
Yeah, huge beat on EPS there. That's wild. Beat by 77%.
And adjusted
Stock.
gross margin 17.6%.
Which was on the upper bound of their range, right?
Yeah.
So, yeah, really good. Market really likes that. Lumentum starting to recover a little bit here. Coreweave, we are still waiting. Okay, guys. Honestly, I'm pretty happy already from what we've seen. This is exciting. Now we just need to round out with a great. Oh gosh, this is gonna. I'm not
Firefly,
getting good vibes right now.
Firefly is also reporting. They just announced extension of multi-launch agreement with Lockheed Martin through 2031. So really good news for shareholders there.
You came in a little quiet, but
Oh, I can turn it up, or I can just. Oh, I'll do this closer. There, that better?
yeah.
Yeah, I was saying multi-year through 2031 launch agreement with Lockheed Martin. So,
Wow.
I hadn't seen the numbers, but I've seen that.
Okay. Coreweave still flat as we wait on the numbers. AMD, NVIDIA, some of the chip names not really moving on SMCI or Lumentum's numbers just yet. We don't also have the full presentations. We just are getting the top and bottom lines right now as they flow through the Bloomberg terminal.
I don't want to be that guy, but with Supermicro, did we talk about their outlook already or not?
No, go ahead.
So they just finished their fourth quarter with this one, but now they gave guidance for the fiscal year of 2027. They expect revenue of between 65 to 72 billion dollars.
Wow, Jose. Ooh, as if I didn't say this 5 minutes ago.
That's what I asked. I asked for a reason.
Yeah,
and
but I
Tanner
wanted
told
to
me no.
trap you. I wanted to trap you.
But I let it know that I wasn't listening.
Well, I got away scot-free. Appreciate
I've
you
done that
taking the
before.
brunt of that that mistake.
Yeah, I've been there before where I said something exactly what Tanner was saying on a live, and I was like, oh man, it's so embarrassing.
No, dude. Neil and Jose do it constantly to each other. It's every single stream. I don't know if I've ever gone through an earnings stream they didn't repeat the exact same thing to each other. They are like, brothers almost in terms of the sibling rivalries that they hold amongst each other. It's so funny. Okay. SMCI, though, up 10%. And I still was barely listening to the guide. So was that higher, much larger than we were expecting?
Correct. I will repeat. 65 to 72 billion dollars versus 52.5 billion dollars.
Versus 52.5. Got you. Coreweave, early bump here, up 2.7, 2.9. Are we about to make history and actually have a green earnings report? Let's wait for the numbers. Uh-oh. Can we actually see?
Don't say uh-oh when I'm not looking at the screen, because you made it seem like we just dropped like 20,000%.
Not like you were going to sell anyway.
Yeah, 100%.
But are we about to see a green across the board earnings day? No, because I forgot that Lumentum was red. But that would have been nice. Uh-oh.
Oracle is preparing
Okay, you
for
can
a
look
new
now, Jose.
cut, apparently.
Don't look, Jose. Don't look. I think maybe CapEx is starting to be released. Coreweave numbers are out. Revenue beat by 1%. EPS was expected at negative $1.47. They got negative $1.14. That was a beat by 22%. Revenue is up 112% year over year, or up 24% quarter over quarter. Is that a little shy? Revenue 2.57 billion.
No, it's a little ahead. 1% beat.
Stock down about 3.5%. But we kind of knew this was not really the earnings. Not many people should have been playing earnings.
There
The
is
website isn't working for me.
some
Is it
better
working for you?
news here. Coreweave adjusted operating income 128 million versus 66.6, and adjusted EBITDA margin of 59% versus estimated number of 55.4%.
Wow.
Revenue for the next quarter is expected to be 2.58 billion versus 2.56 billion. So a slight beat there.
It's not
No,
enough.
no margin expectation for next quarter.
As of right now, that's all I have.
Okay.
Yeah, they don't share CapEx and guidance until the earnings call.
Got you. We have the numbers out on their website as well. I'm trying to get the presentation. But I don't see that just yet. Stock is not doing too bad right now, honestly, versus every other quarter where it's gone down 11% or more. Having this day before earnings where we can kind of hover in and around $88 per share. Remember, just before the market closed, we went up 2.4%. So a 2% contraction is really where we were trading at today.
Backlog was 104. I don't know if Neil mentioned that. I always have to put a disclaimer now. No? All right. Brand new news. 104 billion in backlog.
That's interesting. Yeah, that was around what expectations were. Well under what I was expecting.
Ooh, but they did have
Roy, it's
something, Roy.
excluding
25 billion. Don't let me finish, Neil. Let me finish. All right, let me finish. But Tanner's there. It's excluding more than 25 billion of net new commitments that started in early quarter 3.
Oh, okay, yeah. So effective backlog then.
1.5 gigawatts of active power, Jose. Contracted power reached approximately 3.7 gigawatts.
No way they got 1.5 right now. What?
They said
What?
active power.
That
went
is
up.
wild.
They added half
Holy
a gigawatt
smokes.
in a quarter?
They added a whole Nebius in a quarter. I'm just saying.
That's
Yeah.
crazy.
No, I went through like several of their projects that were coming online or had come online in quarter 2, and it was a massive amount. And there's one that I remember for sure, maybe 2 that are coming online in quarter 3. So I don't remember the total gigawatts, but yeah, their cadence is quite good.
Because I know the guidance management gave us was just 1 point. They said over 1.7 by the end of the fiscal year. I don't think they. But I mean, if they're already hitting 1.5 here, I can't imagine what we're getting by end of year.
Yeah, you're likely to beat that. We're back in the green, by the way. In the stock prices, people, I think, are starting to see their active power. It's a pretty good sign so far. SMCI still holding up that 8%. Lumentum back in the green. Kava down about 1%. No one really cares. Firefly Aerospace down about 1.25%. Coreweave climbing back up 2% again. $92 a share. Steve, how you feeling?
I don't think the Q3 guide is enough for sequential quarter-over-quarter growth on revenue, but I like everything else I'm seeing.
Did they even guide?
Didn't we just say the expected's 2.58 for Q3?
Thank
I thought
you,
I just
Steve.
read CoreWeave will provide forward-looking guidance in connection with this.
I got from Cactus
From fake
Jack.
news. Oh, never mind. That's good news. But might have been a mistake. I don't think they shared guidance.
Okay, so I
I'm not
will
seeing it.
retract my statement. I was going off of what Neil said.
Yeah, but
Good
at,
job,
at least
Neil.
I know. At least I know he's the only one listening. So thank you.
Listen, I'm paying attention. I'm
I
soaking
heard
it
you
all
say it.
in.
I'm just on the website, you know?
He's the fellow cardboard collector. We respect each other.
There you go. We're going to have a conversation about that.
Correct.
This is kind of funny though. This whole idea of does not include 25 billion of new customer commitments added in early Q3. It's like, yeah, no duh. Like that would be every company does not include in Q2 what they got in Q3. But
it's good that they include that just as the effective backlog, so we know where they're at.
yeah, it's realized it's not slowing down. A lot of great customers that expanded partnerships, Cognition, Databricks, big names here. Caterpillar, Grammarly, Sunday Robotics. In terms of new partners of choice, they continue to sign large deals. Expanded active power by nearly 500 megawatts. I'm the first to bring you this news. That is incredible.
By the
Wow.
way, the Isomorphic Labs is the one where Demis Hassabis is CEO. He's going to spend a lot more time with that company, and that's on the list that you just went over. And the company Jose didn't know existed a week ago.
Yeah, I saw the name. I'm like, where have I heard this? So I had to Google it. But I was like, Neil showed me something once in a while.
Guys, CoreWeave, if you can believe it, we are making history right now. This is pre-stutter earnings.
Roy, I don't know. I don't know if Roy, if you follow analyst expectations. So maybe I think you might be the best person to know. Maybe Steve. Was the market expecting 1.5 gigawatts of active power for this quarter? Because that completely changes the revenue expectations for quarter 3 and quarter 4. So I don't know if you guys have anything to say there.
We're ripping.
Yeah. Oh yeah. I mean, that is incredibly bullish. And that's
Oh
a great
my
point,
God.
Jose.
Are we going to hit 100?
I don't know. I've read a couple of notes, but I don't have a I use Fiscal AI for a lot of the analyst expectations, and they don't include that. So I'm not sure.
Yeah,
Yeah,
I don't think they were. So I think we're going to see a nice increase in some of those guidance numbers for quarter 3 here.
This is a breath of fresh air versus the quarters that we've seen previously.
Yeah. No, I was thinking when I did my earnings preview video, and I went through just all the details and the different data center locations and all that. I was expecting it to, maybe rally. This is a little stronger than I expected, so we'll see how it holds. But with the reaction towards the Nvidia news, the 500 billion, I was like, okay, well, maybe the market just is going to continue to hate anything to do with capex and debt. So I was thinking, well, maybe not. But yeah, this is very pleasant. Do you think, Jose, it's the 1.5 gigawatts there that it's keying off of?
I would think so. I think that's going to change completely the expectations on revenue, especially if they mention now that they. I would love to hear more, because I know in the prior quarter they talked about 1.7 gigawatts of at least by the end of the year. If now during this call they tell us that we're actually ahead of schedule and we're going to go closer to 2 gigawatts by the end of this quarter or by the end of this year, now every analyst has to go and increase that revenue expectations for this year. So I'm hoping that it's going to be the latter. They come out and not say that they just accelerated some of it. They're still going to end up with 1.7. So I think that active power is big news for them.
Yeah, I wonder if that's current as in right now, or if it's at the end of the quarter. No, it's the second quarter highlight. So yeah, Denton had a large amount of capacity actually come online. It looks like around July 3rd. So that would not be factored in.
Yeah, that's interesting. I think because of the long-term cycle of these build-outs, like they would have known that this is coming online by Q2. Around the same time whenever they gave guidance for full year. So either they're sandbagging to make sure that they surpass it, or they have less projects that are expected to come on the back half. I don't know.
But I think, like Roy mentioned, I forget who it was. Galaxy mentioned that they were turning on some of the facilities ahead of schedule. And another kind of great point that we got from Galaxy was that they're saying, I don't know if it was from Galaxy or somebody or another company in the data center build out, that now they're getting used to building data centers. So that alone is also accelerating the timeline, because now they know, oh, we did this with the last data center, we can do it on this data center. So it helps out the speed process as well. And I don't know if Coreweave is kind of projecting that just yet.
Yeah, the two that we had reads on so far was Galaxy Digital and Applied Digital, APLD, and they're both like ahead of schedule. And I was like, okay, great, this is good for Coreweave. So it's good for everybody, honestly.
This is really good. Coreweave still up 6.5%. Nebius also catching a bit, up 3.5%. As people are getting a little bit more excited about what's to be expected for their earnings tomorrow morning. Are you guys also going to be... look at the cash position on Coreweave as well. Obviously, they've been raising a lot of money, but it's now another new company high for them, $5.5 billion versus $2.2 billion the quarter before.
I found it, Jose. It looks like it's 132 megawatts that came online on the Helios campus, operated or owned by Galaxy Digital, and that came online around June 30th. So I don't know if they would be in this figure or not, because yeah, it's in June technically.
Did you guys say, and I apologize if you didn't, but the number of data centers that they have and the contracted power that we have as well?
49 prior to this.
Yeah.
Did they have an update on that I didn't see it.
What was the question again, Taylor?
Number of data centers that they're at now and contracted power capacity. We were at 3.5 before.
So we have 51 active data centers. 8 data centers were added in 2026. Contracted power to around 4.2 gigawatts as of today. Actually, the presentation is up, so you can pull it up for everyone to see.
4.2 now?
4.2 for contracted power, yes.
Wow. That's a huge boost. 700 megawatts quarter over quarter.
Yeah, they had 3.5 last time, yeah.
Yeah,
Jose with the layup.
presentation is up. I sent you the wrong link. Here's,
Okay. Cloud platform purpose built for artificial intelligence delivering unmatched performance. Okay.
Do you guys know when we get the next cluster max? Is it
It's supposed to be this month.
This month?
Yeah.
there we go.
Tanner,
51.
you were you are stressed that Coreweave is not going to be at the top of that image anymore.
What are you talking? It's go.
That's what you said 3 months ago. Don't make me go back to the live stream. I know you said it.
You think that okay. I want to clarify what you're saying. I'm stressed that it's not it if it is not, but I don't think it's not. I believe it's going to be at the top. I'm just saying it's going to impact the stock if it's not.
Correct.
Oh, okay. Yeah.
Contracted power is 3.7. I'm seeing here.
As of August.
As of
meetup-
August
Yeah,
11th.
yeah. Come on.
Yeah, that's a nice increase.
Yeah, but I would have liked that at the end of June. Wow, that's incredible. So contracted power went up by 200 megawatts and active power went up by 500 megawatts.
Yeah, that active power is wild.
CapEx is 9.4 billion. Not a surprise that it's a little more than what was expected, just because you can see that they're ahead on things. So I think the market was expecting around 7 or 8 billion, but it was a colossal range with like maybe a dozen analysts that are covering it. So
Could you turn yourself up just a little bit more compared to the Jose's
better?
and the Neils? Yeah.
okay.
Adjusted operating income, 5% margins, 59% adjusted EBITDA margins. And of course, that revenue up 112%, with revenue backlog up 246% year over year. Oh, CapEx, I'm sure we already said it, and that's so stupid. Of course, someone said it already. 9.4 billion.
Yeah, that's just to reiterate. I was turned down a little low, so I'm not blaming you. It was my fault because I was down too low. Market was expecting somewhere around. It was close to 8 billion, but it was a very small sample size analyst, so it's a little bit ahead. But again, that's because they are ahead as far as building out things. Plus, things probably cost a little bit more than what analysts anticipated.
Yeah, Neil's laughing. He was quiet, okay? Speak to the back of the room. Wow, I don't know if we highlighted this just yet. This is this wasn't this high last quarter, if I remember correctly, right? 40% was in the first 24 months?
It was 39% last quarter, so that's a little tick up. But yeah, it's like what this is showcasing is, a lot of companies will have this massive backlog, but they won't really start delivering much on it for a few years. This is within 2 years, 40% of that 104. What would be really interesting is to see where that 25 billion falls. Obviously, they're basically sold out for the rest of the year. I'm sure that they'll reiterate that, but next year, we'll see.
FYI, in Q4, this was 42%, like Q4 25.
SEC clarification may make it easier for qualifying data center owners to raise capital as demand for AI compute infrastructure grows. SEC staff just said that fixed income securities issued in qualifying data center securitizations do not meet the Exchange Act definition of asset-backed securities, providing regulatory clarity as AI-driven data center financing expands. I mean, it just feels like good news after good news.
Yeah,
Steve, you're not smiling.
No, I'm pretty happy. Go back to the RPO. So I didn't get the 125 this quarter, but if you look at the fact that they added 25 billion of net new in early Q3, I mean, you're talking about 24% of their current backlog. So when Q3 ends, they could be at 130, 140.
Yeah, assuming we continue to see those large customers come in.
Yeah.
But yeah.
And why wouldn't you, Tanner? Why wouldn't you?
Huh? Yeah, don't jinx us, Tanner. Why wouldn't you?
Why wouldn't I believe it to happen? because last quarter to this quarter we only added 5 billion. So talk up, children.
Semantics.
You want the smoke? Semantics. The actual gap numbers. That being said, stock is up 9.6%. I don't even know what I was looking at. Nebius is up 5% just from Coreweave's numbers. Lumentum is flat on the day, up 0.1%. SMCI up 7.9%.
It's crazy that this was briefly trading under 60 like 2 weeks ago.
Yeah.
2.5.
And now you can own a stock for the low price of... Come on. You just need one of these bills. Come on.
It feels like me sometimes in the morning when there's like some stock running. I'm like, hey, it'd be really cool if I can capture this figure right there on the screenshot. And it's like so close. It does it for a second. I miss it.
Anyway, I mean, we're up 10%. It's nice.
And the call hasn't even started yet, so it could go even higher.
So
I
we got
thought I
some
would say
buffer
we
room.
could go lower, huh? But no.
So I've not followed it as a shareholder before. I've looked at the numbers. I've seen it, but how is the call usually received by shareholders in the stock? Does it really change
It's
anything,
bad.
or is it just it does?
Yeah, Michael stutters the whole way through, and it sells off usually during the whole call.
Okay, yeah, I've
Don't
actually not
change
listened
us.
live.
100!
Go.
And once we broke through 100, look at the... We're limitless at this point, ladies and gentlemen.
I'm about to call the wife, say double steak on that Chipotle bowl. Double steak.
Double steak.
Actually, not even double steak. Steak on the cup, whatever they give you, the extra steak.
Steak on the cup. Can I get steak on the cup?
And skip the
We can-
Chipotle, go straight to the Michelin restaurant, order a steak.
Jose spends all his money on vacations. He doesn't even know how to celebrate at home. Chipotle on the cup, please. Then we go to fancy restaurants. Okay. Anyway, great sign here from Coreweave. Hopefully this can hold. SMCI up 6.8%. Also a really good report. And honestly, Lumentum's report so far looks good. We'll have to see what the call is like. I'm not going to be listening to it today, as we're going to be focusing on the biggest winner of the day, Coreweave. This name alone has brought together myself, Couch Investor, the great and powerful crime lord himself, Stephen Fiorillo of the Fiorillo crime family, Jose Najarro, and Roy, the doctor of neoclouds, giving them a prescription, letting them know that it's time to grow. I don't know. I was thinking of some blue pill joke about allowing them to finally grow. But
Michael Burry might need those pretty soon.
yeah, dude, he's I'm curious to know what's going to happen with Nebius tomorrow. Obviously, he's just recently shorted that name.
Yeah, let me ask you guys, like, do you think that's just why he didn't pick like Coreweave? He picked Oracle. He's shorted Oracle before too, and he picked Nebius specifically. Is that mostly just because it's a retail name, or do you think he's seeing something there that the others don't have?
He said Palantir is a $1 stock. So honestly, if he said that it's raining outside and I'm outside, I won't even believe him. So
Under $1.
under, even better.
Yeah.
And honestly, I hope it happens. I mean, that would be
Why would you do anything else? You know.
yeah. If it goes where he's saying, I'll only own one stock at that point.
Dollar bills are selling for 20 cents.
$170 bills are selling for $1.
Yeah, that, honestly, like it won't happen, but like that's the scenario where I'm like, okay, I'll take on margin now.
Yeah. Coreweave fell below the $100 range, still holding up extremely strong. But Jose just booked his new vacation, so had to sell a little bit.
Hello,
But-
yeah, thank you.
Hawaii for you and the family, eh? Congratulations.
Thank you. November, here we come.
What do you mean by November? Is that when you get back? Are you leaving tomorrow? You
No,
doing-
that's when I head out.
A few months.
Yeah.
Okay. Anything else in the numbers that you guys are seeing?
Margins are going up, and so if they believe we are going to see sequential increases, I mean, that's going to be great.
Depreciation was almost 1.4 billion this quarter.
Yeah, I mean, to be able to build up 500 megawatts of active power and still have margins grow, it's kind of the truth of what they were saying with that inflection point. Right now, you can, because back last year you were at 200 megawatts or 300 megawatts, and to grow to 1 gigawatt was 3x your original size. But now, if they grow 1 gigawatt, it's not going to be that meaningful an impact to the margins. So I think it's this one's just going to start building like crazy.
Well, do you think that we start to see larger and larger build-outs at that point? I think that depends on, how big you think this scale is going to get. Do you think that there will be quarters where we end up adding on gigawatts or multiple gigawatts per quarter?
I don't know for Coreweave. I think it's potential, but I would say 500 is probably one of the tops that I expect. Maybe like 400 per quarter. But the other thing, though, that we are seeing is what kind of SpaceX is doing is there seems to be a huge market for just one massive data center. I wonder if Coreweave starts to think about something like that. But that's a whole different ballgame, right? Because that's where that's why SpaceX is able to get those crazy margins, because the ability of having X amount of hundreds of megawatts in one layer is a big attractive for a lot of these AI companies.
I just read a report that Meta ended up signing or furthering their contract. I don't see that, but Cactus reported it.
With Coreweave?
Yeah, 21 billion, but I think that was like old news.
Yeah,
I
because I think
think
originally it was
that's-
14, then the 21 was the extension.
Yeah.
I do like seeing Caterpillar there as a new customer.
Yeah, very much so. Look at that build out. 10 megawatts to 70 to 360, 850 to 1.5 gigawatts. Just halfway through the year. First AI cloud provider to bring up and validate NVIDIA's Vera Rubin NVL72. Delivered 7 new AI platform capabilities to accelerate AI development and deployment. Posted record ML perf benchmarks across training and inference. I mean, a couple of other things as well. Very nice. Like you said, selected new customers: Bentley, Caterpillar, Sunday Robotics, Isomorphic Labs. Cognition expanded, Databricks expanded their relationship with them. Periodic Labs, Runway, Rescale, HRT. The big ones, though, Cognition and Databricks, are huge.
Yeah.
Coreweave reached an important inflection point this quarter as our scale began to translate into expanded operating leverage. Customer demand is accelerating as AI adoption broadens, and we continue to deepen our technology platform. Coreweave is built on the conviction that AI is foundational to every industry and that realizing its full potential requires a purpose-built platform. This quarter reinforced that conviction. I mean, the biggest nail in the coffin this quarter is, as Michael just said here, they are seeing operating leverage. The margins are expanding. And if that happens, doesn't that kill the bear case that they can potentially never turn a profit, that these are, an everlasting cascade of horrible expanding debt that can never be repaid, and as GPU spot prices continue or eventually start to decline, that's going to give up all the margin that Coreweave and Nebius end up seeing. Is that fair to say or no? In terms of that's the bear case.
For me, like the real bear case for Coreweave is relating to the pricing floor on memory. That they, there's a rumor, and I would love if an analyst is asking them about this, if they are looking at actually hedging against any sudden price dropping of memory as it becomes becomes commoditized at some point. They did officially do that.
I thought that was one of the stories that came out. Jose, can you?
It's a story that came out but was never confirmed.
Yeah,
gotcha.
And that, like, what that does basically, like what Coreweave has done, and they're very good at making sure that they have what they need as far as from the supply chain, but there's a cost to that, and part of that is for the pricing floor. So if memory price collapses, but they have a guaranteed price that they have to buy at, all of a sudden their competition is able to buy it at a much lower amount. Now, I don't think that's happening in the memory space. The reads that we got earlier in the quarter are pretty clear with that. But that's the one specific to Coreweave bear case that I think is credible, that is very much worth paying attention to.
Did anyone get any more information on SMCI, by the way? Any SMCI news? Obviously, we got guide, and that was really surprising to the upside. A lot of people talking about Coreweave's backlog, not including more that $25 billion of new customer commitments. That's a big story for them as well. But SMCI up 8%. I wonder if that's just purely driven by guidance. I mean, there's definitely been companies that have been able to do that. I don't know if we did speak about Kava, by the way. That company up 13.4% now. Told you, don't disrespect Kava. Double beat from them. Revenue is up 31%. Sorry?
Nobody cares about Kava.
Okay, well, no one cares about making the most money this market close? No?
I'm just saying. You said don't disrespect it. I'll disrespect it.
Good job,
Well,
Steve.
That's because you've never eaten here. Okay?
This is true.
And maybe whenever you do, you will say Kava is the only stock I ever want to own.
Probably not.
But you might like it just because you're up in Canada. You don't have access to some of the really nice food. So I've never eaten at Kava. I've heard it's really good. But
Well, we don't have Kava here either.
okay.
It turns out Kava is nowhere, and the stock continues to grow.
I like it, but I'm not going to buy the stock.
Kava is solid. Got you. Okay. Let's get some more SMCI news out, though. That's really what I want to see as well.
I mean, I'm just waiting for this freaking call. Can they just hurry it up?
Do you guys follow Energy Vault? NRGV? Tiny name, but they destroyed guidance. Revenues up 104%. Stock is up 13.7% after showing off just massive earnings. Contracted backlog skyrocketed. This might be a name that goes parabolic tonight. Oh, market cap 600 million. Wow.
Yeah, I was going to say I've never heard of him. Now I don't feel too bad from never hearing about him.
Yeah. But whenever you have a triple beat, it always, especially on a tiny name, it always draws a lot of attention.
We also have a nice sentiment towards the rest of the Neo Cloud plays. I think, like you mentioned, Nebula is up 4%. I think Galaxy was up about 3%. I think Iran is up about 2%. So pretty excited. Are you guys? Are we doing? Am I invited for tomorrow morning? What's happening tomorrow morning?
Yeah, no, you're not invited.
Got it.
The rest of the four of us, Neil, Steve, Roy, we're gonna have a good time. No, I mean, if you guys want to do something, I've got no plans.
Yeah, I'm jumping on with Tevis and Nate and Neil. Are you doing that? And I think there's one or two more.
It's funny. I started this stream of early Nebius quarters, and now I'm the one getting invited. Huh. Okay, I see how it goes.
Yeah, Manuel. I shouldn't have forgotten Manuel. Yeah, are you wanting to hop in on that too, Jose, or are you wanting to do that with Tanner? I mean, if you
I
want,
don't get invited.
Are you wanting to cover?
I've been there every other quarter.
It's your BFF Tevis that didn't invite you, so there must be some Canadian beef between you two.
Yeah. I think it's Canadian bacon, not.
That was, oh my God, that was a good one.
Look at this little meet cute between you two, eh? First time meetings, celebrating jokes together.
It's kind of like the first time that I got to interact with Steve online. I was like, man, this guy's awesome. So yeah, it's similar, Jose.
Yeah. Well, we can message later, see what we can see for tomorrow.
Yeah.
Because it seems like it's a pack. You're gonna see all these faces, and the chart's gonna be like this small.
Yeah. 10 people that get to say 2 sentences each time. Okay.
When the hell does the call start?
15 minutes. How you feeling, Steve?
I feel a lot better if the calls start. I want to see what happens, and I want to see their commentary.
Yeah. No, I'm honestly pretty happy that this is having a good reaction. I don't think it would have changed my thesis on the company, even if this did sell off. I've seen a lot of quarters from Coreweave and many other businesses just like this, that we see those exact same numbers and yet we're in the red. So it's hard to determine whether or not the increased CapEx or maybe a less than desirable amount of revenue growth or whatever the determining factor is that Wall Street is expecting. This time, obviously, it's working out very well for Coreweave, but those sell-offs also lead to opportunities to buy back more. Nebius is going to be another one that, like we said, will be up for discussion tomorrow. Growth is much, much higher than where Coreweave is in terms of the actual growth percentages, but on a much smaller base. And I'm curious what investors are actually looking for more right now. Nebius has a larger market cap, and they do have some subsidiaries and less debt, and there's reasons to have a higher market cap, but it is so much smaller than Coreweave, to the point where Coreweave has added more active power, as Jose said, than where Nebius even is. So, Jose, you've chosen Coreweave over Nebius in terms of portfolio allocation, but is there something that Nebius could essentially say tomorrow that might change your tune?
I don't hate Nebius. I think Nebius is a great company. I mean, you have the extra opportunities with Nebius. For me, my biggest choice is if even at these levels, at a similar market cap, you're telling me I can get 3 times, 4 times more active power, which is active generating revenue products, and you're still expected to grow in this space, and you're one of the top players that is growing backlog insane, and you have a really great relationship in the past with NVIDIA. I don't know if that's changing, and I can get it at the same market cap as the Nebius. To me, I would pick Coreweave all the time. And I'm pretty much just really focused on the AI cloud space. For Nebius, though, you do have that whole enterprise market. And with the enterprise market, you tend to get a lot shorter contracts, which is extremely bullish in this space where GPU hours continue to go up on a quarterly basis. So that's kind of one of the exciting things about Nebius right now, is they do get the real benefit of GPU hour pricing increasing. For a company like Coreweave, where you have a 3, 4, 5 year contract, you already kind of contracted that hour. So until that contract is over, you're not really going to see the benefits of the GPU pricing. The only benefit that you get is now when that contract is over, your model is a lot better than you originally expected. But I think Nebius, with the shorter, with the enterprise, with a little bit more, a nice amount more software stack solutions, you do get a higher margin base.
Neil, how are you feeling between the Nebiuses of the world that are about to report tomorrow?
I feel good. I feel good. I think they'll continue the momentum. I think the big question mark is the violent situation. What will they mention tomorrow? I don't know. But I assume they could beat this quarter, and then it's all about, are they going to raise their ARR guidance for this year? Could they share maybe more comments about what they're already seeing for 2027? I think that's going to be way more important, because even if, let's say, there was a small delay for Q2, but the fiscal year guidance remains the same or that's raised, then it's not really going to be an issue.
Yeah. Sorry, I'm just looking into Lumentum right here. Increasing demand for ultra high power CPO lasers. Yeah, looking really good. Significantly upping our optical total addressable market. Revenue projections are reaching our target model more than a quarter ahead of schedule. I don't know. Operating margins continue to expand. I'm surprised that this one is in the red at all right now. A lot of this is baked in, like you can see in their PE ratio right here. We're at like 140 PE, and that's before we end up showing off, this quarter. So that'll be adjusted pretty quickly on a quarter that grew 104% year over year, 109%. But still, that expected growth is expected to stay quite high for a little bit now. Wall Street expected 984 million. They got over $1 billion in revenue. Stock is down.
Yeah, for Light, I do think a lot of the growth opportunities are kind of like 2027, 2028 stories. So I wonder if once you get to the earnings call and and management continues to solidify a lot of that commentary, I wonder if you might see like a little bit more excitement on Lumentum stock.
Got you. Neil, do you care about the photonics names at all?
Not one bit.
Why? Why is that? You say it like there's something that you absolutely hate.
No, I dislike quantum names, but no, I don't care. I don't care. Like, I just don't care about Kava. I don't care about these names either. I think I spent enough time.
Don't put photonics
good
and
food
Kava
over
together.
photonics.
It's because of Poet, isn't it?
Nah, I mean, maybe I don't know. No, it's just there are so many other things that I focus on that I don't need it.
Senator Bernie Sanders just called on AI companies to pause development, sending a letter to the CEOs of OpenAI, Anthropic, and Meta, per the New York Times. Steven?
I said it earlier.
Political commentator?
Bernie Sanders is the most truthful politician there is. He says exactly what he believes, and he votes that way, even if he loves capitalism, even though he's a socialist, because he wrote a book about hating capitalism, but made money on it. Now, once again, China's not going to stop developing. We are in an arms race, and we didn't put a moratorium on going to space when we beat Russia to the moon. We should not put a moratorium on AI. You want American companies to succeed, and you want America to lead the way. And if you don't, you shouldn't be one of our elected officials.
Yeah, I think it's fair to have like legitimate concerns, but to like just say, hey, we just should stop everything for whatever reason for however long. That's not the right approach.
Yeah, just think about it. What are they going to do? Hire people to do a study for a year? Think about it. You're hiring these people. What, they're not going to do what you want them to do? It's crazy.
Yeah.
Plus, he's 84 years old.
Yeah, Bernie doesn't surprise me. New York didn't surprise me. What really surprised me was Greg Abbott here in Texas, because you wouldn't normally think that. But I think more than anything, like, it's a signal. And you also I don't know if you guys saw Vivek's position, or he's running, I believe, for governor in Ohio. Um, when you see Republicans that are usually pro-business, basically, now the pause is not the moratorium; it's not the same thing. But regardless, it's surprising in Texas, and I think the read on it is it's such a hot political issue that politicians who, like, kind of see which direction the wind is blowing, if they're in a close race, they may announce something that they don't really believe in necessarily, but they're like, hey, this might be the 1% edge that I need. So it's more of a litmus test, I think, from him of where the political opinion currently sits.
Yeah, like, I mean, I think data centers and AI are going to be one of the biggest political points that it's just going to be thrown out there. One thing with the Texas one that I got less freaked out about, or I don't know, freaked out, but it was like there was like a lot of double booking or triple booking with some of the powers in Texas. So it does seem like the Texas government just wants to make sure, hey, you're only submitting this paperwork if you have everything you need. And it's not like the same company with potential different customers submitting the same thing. And then it makes it seem like this power expansion is crazy. So I like it that it's verified and make sure that we're just not double booking on a lot of this potential energy.
Yeah, it was even more than double the capacity of ERCOT, what they had requested, but some of that is doubled up. So yeah, like there are legitimate concerns, but yeah, that if or when Abbott is reelected, like, the pause goes away, I think, immediately. So
Do you think that as Nick in chat here says, pushback on data centers will get louder and louder and louder?
They could. Nobody wants to live near one. And if you scare people that these companies are going to put one up in your backyard, even if they're not going to, it gets votes and it gets attention.
I mean, I think that'll be the driver more quickly into space. Now, I think space is a long ways away, despite what SpaceX and Elon announced right before earnings. But
All is in 5 minutes.
Not in my backyard. Well, in space is literally not in your backyard. There are other solutions as well. One of those, I saw an interesting approach by HD Hyundai with floating data centers on the ocean. But
yeah, interesting, Roy. Supermicro, I think I don't know if it was an earnings call or a investor event. Someone was talking about space, and Supermicro's team, again, it's Supermicro, so take it with a grain of salt. But they said that what they're actually hearing more is actually the opposite of data centers going under opposed to going up. And he was talking more about data centers in the ocean. I don't know how that goes, but it showcases, I think what it really showcases is that the huge demand of AI is needed, that people are trying to think outside of the box of how there's ways to kind of get that compute. And when we kind of hear that crazy story, that's what I get from it. It's like we're so constrained that we need to find other avenues.
no, I think that's a fair read. Neil, since you're in Belgium, what's the climate there? Because I was a little surprised, even though it was the EU made it sound like it was the biggest deal in the world of them building out and investing some public funds into data centers, being the first AI continent with the laughably small amount that Google would be like, hey, that's pretty small. But is it usually, like, my perspective is usually Europe seems to be like very tech averse. Is there not really much pushback against data centers in AI, or?
I mean, for now, no, not really. We have different issues in the country right now, and I don't think data centers is really the topic of discussions at the moment. At least not in Belgium. I'm pretty sure in France it is, because France gets way more attention from all the big companies. They have Mistral. I mean, Nebius is building one there. Probably going to build some others there as well. But for now, no. But who knows? Maybe in the future, we might get one. I mean, Nebius is literally around the corner, an hour and a half from here. So, from where I am. But yeah, for now, no, not really.
I appreciate that. Yeah, that seemed to be my assessment, but I'm like, I don't live there, so But it is kind of curious. Do you think in the EU, like I know you said like Belgium has other things that you're more focused on, as more and more data centers are built out, because like the presence and the footprint of them is a lot smaller than the United States. Do you think that'll become more of a pressing issue, or is that just going to be oddly unique to the United States here?
I mean, it wasn't that long ago, right, when we had that headline that Europe wants to push for data center build-outs, and the budget was it, I think, 30 billion euros or something like that. Very, very ridiculous when you look at companies in the US that spend it alone. So is it going to be an issue? I am pretty sure politicians will use it to create an issue, or select groups will just create issues just to get some attention or some chaos, because, I mean, why not, right? So the first time issues from the United States flow into Europe just because there are groups organizing this, but I won't be surprised. But then again, it's also going to be good for Europe to actually have data centers here. It creates jobs. It's something that we need anyways, right? If Europe wants to rely less, right? That's the whole thing. If they want to rely less on European companies, then okay, build it in Europe. Do it here instead of complaining every single day.
The call starts in a minute if it's on time. I'm going to try to see if Earnings Hub has the call running live, and then maybe we can have a little price action in the corner. If I can't get that up, we might just have to listen to the call, separately. But I'll see. Okay. Guidance is going to be a big topic of conversation in this one. Is there anything else specifically that you guys are going to be listening for, Jose?
Yeah, I mean, for guidance number, I don't know. I mean, with this new active power, I think it changes a lot. So I'm expecting a nice beat compared to what analysts are expecting. I don't know what the projection is. I know Roy was mentioning he looked at it from Fiscal.ai. Whatever they have in Fiscal.ai, I think it's going to be much higher than that.
Fiscal.ai. Okay. Just waiting on the call here. Listening to music at the moment, but that should turn off any second. I have a very small screen here of the actual stock price. We'll see how this actually ends up looking. It's not great. It's not perfect, but it is some form of a chart that we can look going up or down. Okay.
Yeah. Along with guidance, like specifically the margins, we saw a slight uptick. It seemed like, based on that note on the whatever they call it, that little graphic that they have, that this is an inflection point. They talked about it being Q3, so I'd like to see some commentary on that specifically, and then also where they're at on their annual run rate goal of, I had to look it up, $30 billion through year end 2027 is a goal for the annual run rate. So, which is crazy.
Yeah. And I think last quarter they mentioned they had 75% of that already contracted, not including any renewals. So if there's any update to that number as well, Roy, right? If it's like, oh, we already have 95% contracted for 2027, I think that's insane.
Yeah, Cantor, but they did think the backlog was going to be higher. They said it might be up to 90%.
Coreweave second quarter.
Sorry, you have like 10 more seconds.
Joining the call today to discuss our results are Mike Intrader, CEO, and Nitin Agarwal, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements.
Hold on. I don't know why it's doing that.
Amateur hour here.
I'm just going to share it regularly.
During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investors.coreweave.com. A replay of this call will also be available on our investor relations website. And now, I'd like to turn the call over to Mike.
Good afternoon, everyone, and thank you for joining us. Q2 was an exceptional quarter for Coreweave. We outperformed our plan across the board, with the operating leverage we have been building beginning to show up clearly in our results. Extraordinary execution across the organization drove record financial performance, rapid capacity growth, broadening customer demand, and continued platform innovation. We generated record revenue of $2.6 billion, up 112% year over year. Increased revenue backlog to $104 billion, while driving rapidly expanding enterprise adoption. This figure does not include the over $25 billion of net new customer commitments added in the early weeks of Q3. We continued to execute on our power strategy, reaching 1.5 gigawatts of active power, adding nearly 500 megawatts, more than any quarter in our history, and more than tripling year over year. We remain firmly on track to reach at least 8 gigawatts by 2030. We grew adjusted operating income to $128 million, with margins expanding meaningfully as our scale increasingly translates into operating leverage. And we continued to broaden our technology stack, delivering 7 new AI platform capabilities and achieving multiple industry-first milestones that enable customers to build, deploy, and operate AI faster and at greater scale. Our incredible progress is a testament to the entire organization, and the business is only getting stronger. In Q2, the customer contracts we signed came with contribution margins we expect to be 5 to 10 percentage points above those added in recent quarters. This is more than a collection of milestones. It is evidence that the AI market is developing in line with the convictions on which we built Coreweave. We believe that the AI era is here and will ultimately touch every part of the global economy. That every organization is being transformed, creating an opportunity to reinvent established markets and create entirely new ones. That the future will be led by the pioneers who seize that opportunity, both AI native companies at the frontier and change makers inside established enterprises. That learning and iterating at light speed are now table stakes for AI leadership. And we believe those pioneers need a new kind of platform to unleash AI's potential at scale. These beliefs are the operating assumptions that drive our strategy. They guide our product roadmap, our capital allocation, our partnerships, and ultimately how we serve our customers. Today, I want to discuss how our vision is translating into 4 areas. 1, broadening demand and customer adoption. 2, the continuous AI development tools we provide on our platform. 3, the performance and economics enabled by our AI native architecture. And 4, the power and supply chain foundation that will support years of growth. AI is transforming every organization. The debate around future demand for AI cloud infrastructure will likely continue. But what we know with certainty is informed by our customers' actions. Demand continues to intensify as the market broadens across sectors, geographies, workloads, and generations of GPU architecture. AI is no longer confined to frontier model labs. It is becoming embedded in software, industrial systems, financial markets, enterprise workflows, and national security missions. We see that breadth in our backlog, in the new commitments we have signed, and in the utilization and pricing environment across our platform. Pricing and margins for our Blackwell and Vera Rubin SKUs are setting new highs, while pricing for prior generation SKUs is at or above where it was years ago. Our near-term capacity remains effectively sold out. That is translating into signed commitments on increasingly favorable terms from a broadening set of customers and is positioning Coreweave to gain market share for years to come. Every organization is being challenged to rethink what is possible. AI is not simply accelerating existing processes. It is enabling enterprises to redesign core functions, create new offerings, and enter markets that did not exist before. Caterpillar is a powerful example. Together, we will deploy NVIDIA's Vera Rubin platform to support Caterpillar's physical AI training and inference at industrial scale. Using Coreweave's AI cloud infrastructure as its data factory, Caterpillar will train specialized models that enhance the intelligence and productivity of autonomous construction equipment. Life sciences is emerging as another important growth vertical for Coreweave, as organizations tackling some of the world's most complex scientific challenges increasingly turn to our platform. We recently welcomed Isomorphic Labs as a new customer and are excited to support them in their mission to solve all disease. Financial services remains a major growth area for us as well. We recently added Flow Traders and IMC to our growing roster of systematic trading firms. These customers are using Coreweave to develop and deploy the next generation of AI models for quantitative trading. They select our platform because of our ability to orchestrate high-performance workloads with the speed, reliability, and efficiency those applications require. And in the public sector, our collaboration with Leidos marks an important step in the growth of Coreweave Federal. Together, we are working to accelerate the delivery of secure AI capabilities for defense, national security, and intelligence missions. The future of AI is being built by a new class of innovators. Some are AI native companies operating at the frontier. Others are change makers inside established enterprises who are willing to challenge the status quo. Coreweave serves both. Companies such as Descartes are using our platform to develop Oasis 3, the first API accessible world model for physical AI. IBM is using Coreweave to experiment securely with reinforcement learning, agent tool use, and model evaluation. And through Monolith, our specialist field engineers work directly alongside customers, such as Nissan and ZF, to accelerate the development of enterprise-ready AI applications. Demand now extends beyond our infrastructure as well. Through Coreweave Omni, we are seeing significant interest from sovereign, enterprise, and cloud customers alike. In the past few weeks, we signed our first deal, which will begin to scale in 2027. These examples differ by industry and use case, but the pattern is consistent. AI is moving from experimentation into core operations, and the organizations that act decisively are creating an advantage. Deployment is no longer the finish line. As AI moves into production, the way applications are built is changing, and the leaders will be those who learn and iterate the fastest. For the last several years, many organizations treated a model like a deliverable. Train it, deploy it, and move on. Enterprises no longer operate that way. Training, inference, evaluation, and improvement now form a single continuous loop. Models and agents in production generate real-world data. That data informs evaluation, driving new experiments, which improve the model or application before being redeployed into production. The loop repeats and capability compounds over time. That shift fundamentally changes both the demand curve and the economics of AI. Compute is no longer a one-time requirement concentrated at the beginning of a model's life. It becomes an ongoing requirement that grows with every application in production and every cycle of improvement. Our AI native platform was built for this. It spans cutting-edge cloud infrastructure, a rapidly growing managed inference business, leading developer tooling and agent solutions, and a best-in-class orchestration and observability layer powered by mission control. Together, these capabilities give customers one integrated environment. Customers deploy applications through Coreweave Inference using our models or the ones they have customized with our serverless capabilities, monitor performance with weights and biases, evaluate applications in production, experiment with new models, refine their performance through serverless reinforcement learning or sandboxes, and validate every change against quality, performance, and cost before returning it to production. Coreweave Aria, our AI research and iteration agent, accelerates that process further by analyzing thousands of evaluation runs, surfacing insights in minutes, and recommending the next experiment. That allows customers to compress the time between an idea, an experiment, and a production improvement at light speed. In Q2, we introduced 7 new AI platform capabilities and achieved multiple industry firsts. These innovations were built alongside our customers and partners to solve real production challenges. That is why we are seeing such strong adoption. And just this week, we surpassed 1 billion model training runs tracked on our platform. Behind that number are millions of experiments, thousands of research breakthroughs, and a growing community of engineers, researchers, and organizations building the next generation of AI. Our AI development services, which carry higher margins, are also being adopted by a broader set of customers than our core cloud. That is proving to be a natural customer expansion path, because the developers building AI applications today are the AI cloud infrastructure customers of tomorrow. By serving them early, we are establishing relationships that naturally expand as AI workloads scale. We have seen an explosion of growth in our managed inference platform in the few months since its launch, with growth constrained only by our near-term capacity. Across serverless offerings and dedicated deployments, Coreweave is monetizing tokens while giving customers flexibility in how they consume our platform. Companies such as Grammarly and U.com are moving from experimentation to real production traffic, running AI coding agents, serving their own fine-tuned models, and deploying open weight models at scale. Customers shouldn't have to trade speed for cost, and on Coreweave, they don't. They choose our platform for the combination of total cost of ownership, quality, breadth of service, and performance. That is reflected in our consistent leadership across cost per token and speed to first token on leaderboards like artificial analysis for open source models, including Kimi 2.6, K 2.7 code, GLM 5.2, and Minimax M3. And that leadership is converting directly into revenue. In the past few months since its launch, booked ARR for our managed inference platform has grown from 1 million to more than 100 million. We expect to exit 2026 with at least 250 million of managed inference ARR. Pioneers need a different kind of platform. The continuous AI lifecycle cannot be supported by simply adding GPUs to a general purpose cloud. It requires a new approach from power, cooling, and rack design through networking, orchestration, observability, developer tools, and managed services. That is why Coreweave is purpose-built for AI. Our platform is singular in its depth, breadth, and technical capability. In Q2, we became the first cloud provider to bring up and validate NVIDIA's Vera Rubin NVL72, leveraging our innovations in software-defined liquid cooling and rack management to extend our track record of being first to market. We also set new ML perf records for training and inference with open source models running on the NVIDIA Grace Blackwell platform, and in our tests, achieved the lowest cost per token for inference. However, performance alone is not enough. Customers need enterprise-grade security and observability, reliability, and compelling economics. According to Signal 65, CoreWeave delivers total cost of ownership estimated to be up to 47% lower than the average hyperscaler. Customers also require our platform, which integrates these capabilities with a broader portfolio of storage, CPU, and networking services across a distributed footprint of data centers globally. In July, Gartner named CoreWeave a visionary in its 2026 Magic Quadrant for Cloud AI Infrastructure. We believe that recognition provides additional independent validation of our approach to building the AI cloud. These achievements are not isolated technical milestones. They translate directly into faster deployment, higher utilization, better application performance, and lower cost for customers. Pairing product depth with best-in-class performance, quality, and market-leading TCO is a winning formula for our customers and for CoreWeave. CoreWeave is the foundation for AI at scale. This market requires a foundation at a magnitude unlike anything that came before. That means securing power, sites, cooling, hardware, storage, networking, and supply chain inputs well ahead of need, and operating them as one integrated system. As I shared at the top of the call, we ended Q2 with 1.5 gigawatts of active power, adding close to 500 megawatts in the quarter alone. To put that in perspective, we added more power in Q2 than any single neocloud operates in total today, according to third-party estimates. Critically, our scale is working in our favor, and the math gets better from here. Each new deployment is landing against a much larger installed base than it was even 1 quarter ago. As that base grows, each new build becomes a smaller part of the whole, while contracted revenue from existing deployments remains in place. This is how we are transforming scale into operating leverage. It is why margins expanded in Q2 and why we expect them to continue expanding sequentially during Q3 and Q4. We are also securing the ingredients required to sustain growth over a multi-year horizon. Contracted power grew to 3.7 gigawatts in Q2. Since quarter end, we have added roughly 500 megawatts, bringing contracted power to 4.2 gigawatts as of today. These figures exclude more than 1.5 gigawatts of further potential power from powered land we have accumulated, options we have to expand at existing sites, and LOIs we have executed. Our first several self-builds are already well underway, including our first site expected to come online later this year. Powered land forms the foundation for deeper vertical integration, giving us greater operational control and supporting enhanced long-term margins. We are also expanding globally and have contracted more than 1 gigawatt of power outside the United States, including recently entering the APAC region with 360 megawatts in Indonesia that will begin coming online in approximately 18 months. We expect international markets to become a major driver of growth as we meet customers where they and their end users operate. All in, we have excellent visibility to our target of at least 8 gigawatts by 2030. We expect demand to meaningfully exceed supply for years. In that environment, access to power is only part of the equation. Just as important is each necessary component required to deliver the AI cloud at scale. Building on our close partnerships with NVIDIA and our OEM and ODM partners, our recent long-term agreement with Solidigm is one illustration of how we are de-risking access to the critical inputs needed to serve our customers. Our investments in technology, capacity, vertical integration, supply chain, and global expansion all flow from the same vision. AI is increasingly pervasive. The pioneers who move fastest will lead. and they will require a platform capable of supporting continuous learning and deployment at unprecedented scale. Before I turn to Nitin, I want to reiterate that CoreWeave enters the second half of the year with more momentum than at any point in our history. AI is reshaping every industry. The pioneers that are building need more than compute, and that is why they come to CoreWeave for an AI cloud designed for the full AI lifecycle, serving any workload from frontier training to rapidly scaling inference. Demand continues to exceed supply across sectors, geographies, and generations of infrastructure. We are delivering at extraordinary scale to a diverse set of customers with improving operating leverage and visibility into the power and critical components required to sustain growth for years. The opportunity ahead is generational. CoreWeave is the essential cloud for AI. Our conviction in our strategy has never been stronger, and our execution continues to reinforce it. With that, I'll turn it over to Nitin.
Thanks, Mike, and good afternoon, everyone. Q2 was an exceptional quarter for CoreWeave, marked by intense customer demand, significant ramp of our active capacity, and continued execution against our product and financing roadmaps. Perhaps most importantly, Q2 marked the quarter in which we saw margins inflect, expanding sequentially as we had discussed over the past several quarters. Before diving into results, I wanted to spend a few moments touching upon how demand dynamics are evolving in the current environment, as well as its implications on cash flows and the value of our rapidly growing infrastructure footprint. Demand for CoreWeave Cloud remains exceptionally strong across the entirety of our customer base, with demand from multiple customers for each GPU we bring online. We are being disciplined in how we allocate our scarce cloud capacity. We are prioritizing opportunities that are strategically important, adding new customers while deepening long-term existing relationships and delivering attractive returns that, as Mike noted, are expanding further. The scale of our AI products and services beyond GPUs also continues to ramp significantly as customers consolidate spend with us. These margin-accretive businesses, including storage, CPU, networking, and software, already exceed $400 million of ARR as of Q2. We expect they will continue to expand rapidly. Simply put, customer spending on CoreWeave has gone up as customers recognize the increased value we deliver. And this operating margin improvement came before our July pricing changes, which included an approximately 25% increase across SKUs in response to the current demand environment and the increasing ROI our customers are observing from their investments in the CoreWeave platform as they shift to inference. We're also passing through component price increases. In terms of how this translates to cash flows, as we previously discussed, a typical 5-year contract carries strong and still expanding unit economics across its term. But those economics do not arrive evenly. The cost, primarily in the form of CapEx, is front-loaded, requiring a combination of debt, customer prepayments, and other corporate-level capital to finance its build-out. Once the cluster is delivered, contracted revenue ramps, becoming predictable and highly cash flow generative. This is all considered in our underwriting of expected margins before a contract is signed. The deployment delivers attractive returns, fully repaying asset-level debt used to fund the CapEx while generating significant additional free cash flow. So when an initial contract ends, the cluster no longer has any leverage, and we are free to recontract that cloud infrastructure or offer it to the market. We will have generated an attractive return even before the prospect of further monetizing the cloud infrastructure. Every resale or renewal is incremental on top of the returns already earned within the initial term. What we are seeing today is that the upside of recontracting is real, as we remain largely sold out of prior generations of NVIDIA GPUs, in addition to the current SKUs. So as our earlier generation fleets roll off their original contracts, they offer the potential to deliver strong returns in the subsequent years. We are seeing this across our Ampere and Hopper fleet. As an example, we recently signed an A100 contract that extends into 2029 at an attractive price. As a reminder, this SKU was introduced in 2020. Clusters of prior generations of architecture offer installed, energized, production-grade compute already running at scale. They come with a proven ROI for customers. In a market where new capacity is supply constrained and costs are rising, AI cloud infrastructure in production is a scarce, valuable asset. While we have built a business whose economics do not rely on recontracting after initial customer term, increasingly, we are seeing longer utilization at higher prices, offering the potential for significant further upside. With these tailwinds at our back, we are more confident than ever in the long-term ROI of our product and capacity investments, enabled by our industry-leading AI cloud services. Now turning to Q2 results. Revenue was $2.6 billion in Q2, up 112% year-over-year and 24% sequentially, driven by continued strong execution and customer demand for Coreweave's AI cloud platform. Revenue backlog ended the quarter at $104 billion, up 246% year-over-year. As Mike noted, this does not include the over $25 billion of net new customer commitments we added early in Q3. Of the existing backlog, more than 50% is attached to a contract where customer delivery has commenced. We expect this figure to reach more than 2/3 of our Q2 backlog by the end of this year. Operating expenses in the second quarter were $2.6 billion, including a stock-based compensation expense of $165 million. The increase in our operating expenses was a direct result of scaling our active power while converting backlog into revenue. This drove the corresponding increases in our cost of revenue and technology and infrastructure spend. In addition, the increase in sales and marketing was driven by increased investment in our go-to-market organization as we further diversify our customer base and expand into new products and markets. G&A increased, driven by personnel cost to support our growth while continuing to moderate versus revenue growth. Adjusted EBITDA for Q2 was $1.5 billion compared to $753 million in Q2 of 2025, doubling year-over-year. Our adjusted EBITDA margin was 59%. Adjusted operating income for Q2 was $128 million compared to $200 million in Q2 of 2025 and up from $21 million last quarter, well above the high end of our guidance as operating leverage comes into our business with scale. Adjusted operating margin was 5%. Margins expanded as we scaled despite continuing to incur significant ramp costs. Net loss for Q2 was $626 million compared to a net loss of $290 million in Q2 of 2025. Interest expense for Q2 was $640 million compared to $267 million in Q2 of 2025, driven by increased debt to support the continued scaling of our infrastructure and delivery of our contracted customer commitments. We recorded an income tax provision despite a net loss due to valuation allowance on net deferred tax assets. As noted last quarter, absent significant discrete items or a change in circumstances, our tax rate should remain broadly consistent over 2026. Adjusted net loss for Q2 was $567 million compared to a net loss of $130 million in Q2 of 2025. Turning to capital expenditures, CapEx in Q2 totaled $9.4 billion, slightly above the high end of our guided range. Higher CapEx in the quarter reflects customer deliveries accelerating. Construction in progress, CIP, increased to $11.9 billion from $9.6 billion quarter-over-quarter, signaling the significant amount of PP&E we expect to deploy early in Q3 based on the large amount of power we received very late in Q2. In fact, in June, we brought on more than 300 megawatts of active power, which makes June itself larger than any full quarter in our history. As Mike noted, the global supply chain remains complex. We continue to navigate these challenges with operational discipline and leveraging our partner relationships, including new ones like Solidigm, to strategically source required inputs. Turning to our balance sheet and strong liquidity position. As of June 30th, we had more than $6.9 billion in cash, cash equivalents, restricted cash, and marketable securities. In Q2, we made significant progress in strengthening our balance sheet and expanding the depth and breadth of our access to capital, raising approximately $18 billion across a combination of debt, convertibles, and equity. These transactions included several firsts, like our inaugural Eurobond, as well as our first ever delayed draw term loan backed by HPC infrastructure issued in the public markets. Our most recent financing, our second publicly syndicated term loan, marked another significant milestone as the first to include shorter duration customer contracts. The transaction, which priced during one of the most dislocated weeks for credit this year, was met with meaningful interest. Despite the environment at the time, we chose to complete the transaction at its full size. Our spreads have retraced since. Perhaps most importantly, the transaction demonstrated the credit market's growing conviction in long-term value of NVIDIA infrastructure running on Coreweave Cloud. This financing is significant as it unlocks our ability to serve critical part of the enterprise market at scale, while also allowing us to accelerate the ramp of our managed inference platform and grow our exposure to shorter dated contracts that typically come at a higher ASP and margins. These transactions attracted broad and deep investor participation, highlighting the significant interest we continue to see in supporting Coreweave's journey. The combination of these transactions brings us to over $32 billion of debt and equity capital secured to date. Over the past year, we have reduced our weighted average cost of debt by almost 300 basis points, representing approximately $1.1 billion of annualized interest saving based on our end of Q2 debt load. Turning to guidance. As a result of continued strong execution, we now expect to end the year with more than 1.85 gigawatts of active power, up from our previous guidance of more than 1.7 gigawatts. In terms of how this flows through the second half, we expect Q3 revenue to be in the range of $3.45 to $3.6 billion. We expect Q3 adjusted operating income of $200 to $260 million as margins continue to sequentially expand, reaching low teens in Q4. Q3 interest expense is expected to be in the range of $860 to $940 million, reflecting the growth in our debt balance to finance our accelerating deployments. We expect CapEx to be $11.5 to $13.5 billion based on the significant amount of new capacity we will be delivering to customers. Moving on to full year. Our disciplined execution and the momentum we are seeing across our customer base gives us confidence in raising our full year 2026 revenue guidance to $12.4 to $13.2 billion and adjusted operating income to $960 million to $1.15 billion. As a result of our increased expectations around capacity to be delivered to customers this year, as well as some of our significant recent wins, we now expect 2026 CapEx in the range of $35 to $39 billion. Finally, we're also raising our expected end-of-year annualized run rate revenue to $18.5 to $19.5 billion. The long-term nature and attractive margins underpinning our contracted revenue backlog continue to provide us with clear visibility, and we are confident in the targets we have put forward. In closing, Q2 demonstrated the strength of the demand environment for Coreweave's full technology stack and the discipline of our operating model. We strategically expanded our customer base to support the next wave of enterprise AI adoption at increasingly attractive margins. Customers are expanding their spend with Coreweave to leverage the full depth of our AI native platform. We remain on track for our sequential margin expansion through the balance of the year, and we have made significant additional progress on our capital structure, reducing our weighted average cost of capital while securing the financing required to support our long-term growth plan. We look forward to seeing many of you at our annual developer conference, Fully Connected, in September, where you will hear from our leadership and customers alike in how our platform is accelerating AI in production. Thank you. With that, we will open up for questions.
We will now begin the question and answer session. Please limit yourself to one question and one follow-up. If you would like to ask a question, please press *1 on your telephone keypad. To withdraw your question, press *1 again. Please pick up your handset while asking a question. If you are muted locally, please remember to unmute your device. Please stand by while we compile the Q&A roster. Your first question comes from the line of Samik Chatterjee with JP Morgan. Your line is open. Please go ahead.
Hey guys, thanks for taking the questions and congrats on a strong overall print here. Maybe just a couple of topics. One, you did mention the renewal opportunity with shorter term contracts as some of the older contracts come off expiration to leverage sort of the pricing that we're seeing in the market. Can you just help us think through, as you engage in some of that discussion with customers, what you're finding in terms of typical customer intent in terms of contract period, and how much of your install base of equipment is maybe up for renewal over the next few years? If you can give us a sense of how to think about the magnitude of that opportunity. And I have a follow-up. Thank you.
Thank you for the question, and excited to spend a little bit of time with you talking about what was a truly outstanding quarter for the company across our infrastructure, across our software, across our solutions, across our sales and contracts with new clients and existing clients. One of the most exciting components of what we are beginning to understand and what we believe the market is providing real insight into right now is that the older generations of infrastructure continue to have significant value for use cases within many of the consumers of AI. And we've talked about this literally for years now, that the most bleeding edge solutions that are coming out of NVIDIA that we build into our cloud and deliver to our most demanding customers, that's really important for some of the most cutting edge use cases. But within that environment, within that ecosystem, there are an enormous number of other use cases that can make use of older, more later dated SKUs. And the fact that we have been able to go ahead and sell a GPU whose architecture was from 2020 in a contract that was fully priced out to 2029 really provides some insight into what the future is going to look like as this infrastructure comes off contract.
Yeah, in terms of the capacity that's coming up for renewal, Samik, that is a very limited part of our fleet, and the ASPs on the older generation remain higher or at levels that we've seen about a year ago. The second part of the piece that is very interesting in our business is as these fleets come off maturity, it allows us to have a great product in terms of managed inference to serve for our customers, which, as Mike noted, is a very fast evolving nature of our business, part of our business, which we expect to continue to grow rapidly and expect to have about $250 million of ARR by the end of the year.
And for my follow-up, thanks for all the details there, but in terms of the follow-up, can you talk about the supply chain a bit? You're obviously navigating it pretty well to bring capacity online, but in terms of the agreement that you have now with Solidigm, for example, how are you looking at sort of the need to maybe do something more broad-based across supply chain in terms of longer-term agreements to assure yourselves of more supply as well, so that you can continue to sort of execute on the capacity that you want to bring online? Thank you.
Yeah, it's a great question. So look, end of the day, my job is to ensure that this company has the capacity to deliver the product that our clients require. And in order to do that, we need to aggressively manage a complicated supply chain. And that supply chain includes everything from land, power, and shell, through GPUs and networking, through memory, all of which is being challenged by the growth and expansion of artificial intelligence. In order to do that, we have built over the last several years really long-standing, deep relationships with our ODMs, our OEMs, NVIDIA, the companies that supply us with memory, all of them. And what we've done is we've thought about what is necessary to ensure that we have access to the infrastructure and the components and the capital that we need in order to deliver our products at an acceptable price and quality to our clients. And it's one of the things that's just embedded in the DNA of Coreweave. That's what we do. It's part of what we do every single day, is nurture these relationships and ensure that we have access to everything that we need in order to deliver the product, which is NVIDIA infrastructure delivered through our cloud.
Now, one thing, Shamik, to note here is the increase in the value of output of the Coreweave cloud has outpaced the value of the input increases that we are currently experiencing in the supply chain. And as a result of it, what you're seeing is margins expand, as Mike noted, in his comments around, the typical contribution margins that we saw last quarter were 5 to 10 percentage points higher than what we've observed in the recent quarters.
Great. Thank you. Thanks for taking my questions.
Your next question comes from the line of Brad Zelnick with Deutsche Bank. Your line is open. Please go ahead.
Great. Thanks very much, and congrats on the strong execution. My first question, I wanted to ask about your managed inference offering, which is off to a really strong start. What are your initial learnings, and what are the factors that inform your thinking on allocating capacity to it going forward versus your traditional take or pay deals? And I have a follow-up to that as well. Thanks.
Yeah, thank you for the compliment. It really was a great quarter for us. We're very excited about it. Look, when we think about our offering, we really think about it holistically. And we have made enormous strides through the last several years to focus on building scale through these long-term take or pay contracts. As we've hit hyperscale, we understand that we are going to need to broaden our offering to provide the products that our clients need, that to deliver products that have higher margins, to provide the software solutions, to provide access to CPUs, all of the things that are necessary for our clients to be successful. And when we think about the lessons that we've learned as we've gone through this unbelievable and unique scaling of our managed inference product, which went from $1 million to $100 million inside of a single quarter, we really think about the fact that that is an incredible opportunity for us to offer the most bleeding edge compute that we have, but also a wonderful way for us to access and use GPUs that are coming off contract in a way to extract maximum value for the company over time. So look, the market is very deep. We think that we have an embedded advantage because of our control over the silicon, and we think that we're going to be very successful in that market over time.
And Brad, one thing to note here is, we announced yesterday around a DDTL 5.5 closing, And that shows that the capital markets are extremely interested and supportive of Coreweave's product in terms of underwriting shorter duration contracts, which is definitely a tailwind as we look at these markets to support our customer needs.
Thank you, Nitin. Thank you, Mike. That actually leads to my next question. So on the 5 to 10% better margin that you're seeing on recent deals that you're signing, can you help unpack the drivers? How much is a function of shorter duration deals versus strong competitive differentiation or other factors? And what are you seeing more broadly just out there in the market as it relates to pricing? Thank you.
So it's a combination of a lot of things, and it's difficult to deconstruct it. The infrastructure that we deliver through the Coreweave cloud is more valuable to our customers than any other solution that they can encounter. The quality of the platform, the reliability of the infrastructure, the security, the TCO, all of those things contribute to customers coming back to us again and again and expanding their footprint within our cloud and infrastructure. And so there is a piece of it which is they understand how much more valuable a given piece of infrastructure is delivered through us. The second piece of it is many of our clients are monetizing their products. And so they are more aggressive about coming in and willing to pay us higher margins because they need access to the compute that will allow them to be successful. This is a phenomenon that's occurring across the infrastructure space, but it's particularly occurring within our ecosystem. And it's very exciting to see as the premium product that we deliver is priced in a premium fashion by the consumers of this compute.
Thank you.
Your next question comes from the line of Amit Daryanani with Evercore ISI. Your line is open. Please go ahead.
Hi, thank you. This is Irvin Liu on for Amit. I had one and a follow-up. So my first question is, it sounds like there's upward pressure to pricing across multiple vectors, including the higher value you provide to your customers, the pass-through of higher component costs, and the recontracting opportunity coming up. So with that in mind, should we still think of kind of the $18 to $19 billion in ARR as kind of the exit target for 2027?
Yeah, so we increased the exit ARR number that we provided in guidance to you folks right now at 18.5 to 19.5 for 2026. So that is baked in our guidance that we provided to you.
Okay, got it. Thank you for that. And then for my follow-up, I think the regulatory backdrop for data centers appears to be increasingly difficult. There have been reports of local opposition to data centers. With this in mind, can you talk about your confidence level in deploying more than 3 gigawatts of active power by the end of next year and kind of your roadmap to 8 gigawatts by the end of the decade?
Sure, and your question is very timely and very important for the entire AI space and the entire data center space. I guess I'll start with we believe that the certain communities have moved forward with moratoriums, and we feel like moratoriums are they're not going to impact the demand for this infrastructure. They are going to impact where this infrastructure gets built. And so our approach to how you engage with the stakeholders is that you have to be extremely collaborative with the communities that ultimately host the infrastructure. And that's based on transparency. You have to work with the local governments. You've got to work with the utilities. You've got to work with the policymakers in order to allow yourself to ensure that what you're building fits into the communities that you're entering. Ultimately, at the end of the day, it is in our interest and it is in their interest for us to be good neighbors and of their community. A lot of that comes down to making sure that you're paying for grid upgrades so that it doesn't fall or impact the rate base. You create an enormous number of construction jobs. There are long-term jobs that are left that survive within the data centers. The data centers that are being built contribute to the tax base. All of these things are incredibly important to how you enter into a community and how you engage that community as you're building this infrastructure that is so necessary in order to be able to provide America's AI leadership. And so, when we talk through the numbers with you guys, we basing our progress on where we are today and what we have guided here. None of those numbers will be impacted by the regulatory pushback as of today. We are comfortable with it. We continue to expand. We continue to engage. Our data centers are best in class, and we expect to be held to that as we continue to build our infrastructure across the globe.
And Irving, just to give you some numbers in perspective here, if you look at our gigawatts contracted today, they're already at 4.2 gigawatts contracted. In addition, we have about 1.5 of powered land, options to execute, LOIs that we have executed. That puts you close to about 6 gigawatts already in terms of how we think about power, and it's middle of 2026. So we remain well on track to execute against our stated goal of greater than 8 gigawatts of active power by end of 2030.
Got it. Thank you for the color.
Your next question comes from the line of Raimo Lenschow with Barclays. Your line is open. Please go ahead.
Thank you. Congrats from me as well. I wanted to talk a little bit about the growing importance of inference for you guys. How does your fleet need to evolve? Because inference needs to do a lot more CPU, a lot more storage. Can you do that in the existing data centers? Do they need to involve? Can you speak to that as well to make sure we have the capacity there going forward?
Yeah, it's a great question. It's a question we've been talking about now for several quarters. We believe that when you're building infrastructure, you don't build infrastructure for training, and you don't build infrastructure for inference. You build AI infrastructure. And when you build AI infrastructure, you need to ensure that you have all of the components to be able to serve the full AI loop, everything from training through inference, as it cycles back and forth, as it moves through the iterations that are required in order to serve your clients and those companies that are consuming this. And so really, the infrastructure that we built will move seamlessly into the ability to serve inference over time.
Okay, perfect. And then one follow-up is obviously with the news from Meta yesterday, a lot of questions that we faced today was around doing AI in the edge, etc. And then, all these concerns came up again. Can you talk about how you see the market evolving between edge, smaller clouds, neo clouds, and the hyperscaler? Thank you.
Yeah, one of the things about Coreweave that should never be underestimated is we sit at the epicenter of an incredible amount of information flow from across the entire industry, right? The hyperscalers use us, the labs use us. You've seen enterprise begin to scale within our platform. The information flow that's coming back and feeding us the clues to how the world is going to look in the future has been incredibly powerful for us in terms of how we position ourselves and our compute to serve our clients. Look, at the end of the day, we believe that there are workloads that are going to be served from the edge, and there are workloads that do not require the same level of latency protection. And we have built our cloud to be able to serve both of those constituents effectively. And we will continue to build in that fashion. We will be informed by our clients continuously whether they need a little bit more of edge, they need a little bit more of scale that is not as latency sensitive. All of those things are being fed to us on a continual basis. And so, yes, we do see workloads on the edge, And yes, we do see workloads that don't require to be on the edge. And we are very, very comfortable that the scale of our infrastructure and the ability to move it back and forth is going to provide a competitive advantage for CoreWeave over time.
Raymond, to your point in terms of increased competition, even with this increased competition, we're seeing demand, pricing, and margin all expanding, which is a signal for the growth in the CoreWeave kind of product, as well as our growth in overall in an already massive TAM that exists.
Yeah, exactly. Yeah. Okay, makes sense. Thank you.
Your next question comes from the line of Michael Turin with Wells Fargo Securities. Your line is open. Please go ahead.
Hey, great. Thanks very much. Appreciate you taking the question. I realize there's likely some rounding here, but you added an impressive 500 megawatts of active power in the quarter. The revenue, if we're looking at the sequential adds, is fairly consistent with last quarter. We can hear all the commentary around the uplift that's coming. So maybe help us think through the linearity of capacity added, and when that 300 megawatts added in June starts to hit more of a steady state in terms of model contribution. And also would be useful as a second part to hear any early market signals you're gathering on Vera Rubin monetization and what the uplift there could look like versus prior generations. Thank you.
Yeah. So as you mentioned, right, you saw Q2 we added about 500 megawatts of power. 300 of that alone was in the month of June, which is higher than any amount of power that we've added in any history of prior quarter for CoreWeave. So definitely that power was back end loaded in terms of Q2, which you will start seeing kind of come through in Q3 and Q4 in our business. And then in terms of
yeah, so let me maybe I'll take a moment to speak to Vera Rubin. Vera Rubin is a generation that is seeing the margin expansion right from the start, and so it's really exciting for us. The demand for the Vera Rubin platform is enormous, and the pricing power that CoreWeave has been able to garner with its CoreWeave Cloud, delivering that infrastructure really bodes well. And when we were talking about that, 5 to 10% margin step function that we're seeing, a lot of that is coming in the Vera Rubin SKU. We're excited about where that's going to lead. We think that it's going to be a very, very successful SKU for CoreWeave and CoreWeave's clients.
Thanks very much.
Your next question comes from the line of Brett Knoblauch with Cantor Fitzgerald. Your line is open. Please go ahead.
Hi, guys. Thank you for taking my question. Congrats on the very strong quarter. Mike, I guess just kind of based on the prepared remarks, it looks like the pricing environment's never really been better for older generation and obviously newer generation GPUs here. As you look at the GPU fleet that's maybe rolling off contract, can you talk about the cadence of how you guys look to either recontract that or kind of put it on spot or in your inference products, and how far in advance of the roll-off of those contracts would you look to kind of make that decision?
Yeah, so look, it's a good question. It's one we're working through. Keep in mind that the environment for inference is incredibly dynamic, and it is scaling so fast as we kind of struggle to keep up with the build out of new infrastructure. The flexibility that we are given because we have infrastructure coming offline allows us to continue to scale the inference product as we're continuing to explore exactly how big, how extensive is the managed inference opportunity for us. Some of the infrastructure that comes offline, we go ahead and we place back into a term contract if we think the economics warrant putting it in. And the economics include both the term that we're able to garner, as we think about the long-term stability of the company and the long-term obligations that we need to support as we continue to build and scale the company. But we also do recognize that in the short term, there is an opportunity to sell on shorter term contracts and extract additional margin on this infrastructure as the world tries to catch up with what is a systemic disequilibrium that has really existed for several years now and will continue to exist for the foreseeable future.
I think that kind of leads to my next question. I guess off the back of DDTL 5.5, where you were able to kind of get funding for shorter duration contracts combined with kind of this data center NIMBYism political atmosphere that's kind of taking off. It feels like you guys should be quite well positioned given you are the most scaled to realize the most price benefits. How does the success of DDTL 5.5 change the way you view on kind of target durations on a go-forward basis? Is that an avenue you want to use more to maybe extract more margin in shorter duration contracts, given the useful life is there?
Yeah, I mean, you're exactly right. The execution of the DDTL5 puts CoreWeave in a position where we get to populate the curve in terms of what we think is the most profitable configuration for term leasing. And so we want to sell our compute on long-term contracts. We also want to sell it on shorter-term contracts to extract additional margin. And we have been really, really aggressive about doing that. We were the first ones to bring the 5.5 to market in order to be able to really plug into those. There's one more really important part of the short-term contracts that I think it's important for everyone to understand. When you're thinking about enterprise tends to want to enter into contracts that are not 5 years in length. They tend to think in shorter cycles than that. And so by enabling the financing market to support the contracts in 5.5, we're able to go ahead and diversify our terms so that we're able to support additional contracts. It opens up whole new markets for us. These clients want to buy compute for 2 years or 3 years, and that's not a market that was easily accessible to us until we were able to bring DDTL 5.5 to market, and now that market will accelerate meaningfully as we're able to offer compute to our customers on a time frame that they are able to consume it, buy it, and enter into contracts to purchase it from us.
Awesome. Well said. Thank you, Mike.
This concludes our question and answer session. I will now turn the call back to Mike Intrator for closing remarks.
Before we sign off, I want to thank our team, customers, and partners for their trust, hard work, and commitment to CoreWeave. None of these achievements would have been possible without you. I'm incredibly proud of what we have accomplished together and for what comes next as we build the essential cloud for AI. Thank you all for joining today. We appreciate your support, and we look forward to updating you on our progress in the quarters to come.
How did you guys think about that, eh? Nice little bullish NeoCloud report to start the week of earnings again.
Super bullish.
Steve, take it away.
I mean, there's not much to say. They said everything that you need to say. Sorry. The fact that they are scaling at this pace and it doesn't seem like they're letting up makes me just believe everything that I've been AI pilled on. I mean, I think we're at 6 p.m. I really do. I don't even think we got to the bar yet.
This is everyone's AI timelines. They keep getting extended. Jose, I know you were keeping track of some comments that were made in the call. Do you want to highlight some things that were said during the earnings call?
Two things that really grabbed my attention was first the A100. Obviously, kind of that was intense. I mean, in prior commentaries, they said that pricing is typically on par or higher when they first kind of made these contracts multiple years ago. And if this is a company that when they make these multi-year contracts at those pricings, they are already making money, how much money, how much margin expansion is coming from any extensions of contracts that they've already paid off, right? That after 3, 4, 5 years, they're already done. Like, what is that margin expansion going to look like? A100 is crazy, but eventually we're going to see it with the Hopper, right? Hopper, and then eventually the Grease Black ones. Those are the first thing. The second thing is, it does seem like now, I feel like CoreWeave, when they built this data center built out, they really did it in the safe way compared to other players. And by that, I mean that they only make contracts when it's these long-term deals, right? 5-year deals. And they talked about the mechanics and the economics behind it, where obviously you're going to get a lot of CapEx built out. But now that you're at 1.5 gigawatts of active power, now they have the opportunity to use that revenue to say, you know what, I no longer need to make those 5-year contracts. I can now, and we kind of saw it with the DTL 5, I forget what it was yesterday, where I don't need to make that 5-year contract. Now I can make a 2 or 3-year contract. Margins are a lot better. And then after those 3 years are done, I can do it again if I believe this market will continue with this type of dynamic that we're in. And that's where I think the final question was like, that's what we're looking at, right? We're trying to decide, depending on the customer, depending on the contract, if the things that go up for renewal, do we go back to a 5-year contract, which is beneficial for us, or do we kind of keep some for these shorter term contracts where we tend to have margins? So I'm very excited, and I do believe this was an inflection, just like they mentioned. This quarter was going to be the inflection point of start of something new, and I think that's what we're getting.
I just want to add some clarity on that, because I saw a bunch of questions in chat, people saying, you know, what even is the A100s? Because this was a long time ago.
2020.
Yeah. So this is NVIDIA's architecture before that Roy just said. That SKU was introduced in 2020. So the quote that he said is that they're signing A100 contracts that are extending into 2029 at attractive prices. So the Michael Burry thesis is that as better architectures end up coming out, that the old, like, no one will ever want to use an A100, H100, you know, B200 or anything along these lines, because the Vera Rubins just came out and they're going to squash all the previous GPUs. So the depreciation schedules are way too blown out of proportion. What Michael just said in the call is that they are showing a 9-year life cycle currently. Maybe that gets extended again, who knows? But a 9-year life cycle where they're depreciating over 6 years. If I could just add one last thing to that, it's at attractive pricing, which is pretty exciting. Honestly, it's probably at similar pricing to whenever the A100s came out originally, which is way beyond expectation. And then on top of that, sorry, I lost my my train of thought there. Oh, in fintech, we break down customers that they try to bring on, and we call that lifetime value to customer acquisition costs, or LTV to CAC, right? Imagine what this is going to look like as people start looking at the lifetime value of a GPU to the CapEx spend. You know, what does that look like? Like LTV to CapEx. I think that this is absolutely wild for the neoclouds, and a really, really big sign that their depreciation schedules are not too long, and that CoreWeave was just ahead of their time, assuming that these life cycles would be much longer than initially anticipated. But Roy, would love to hear your thoughts.
No, there was so much that was bullish in this call.
Yeah.
And I'm not just saying that because of the stock price. But the A100 piece was. This, by the way, is not the only read that we're getting into this. I think it was AMD, Jose or Neil or Tanner or Steve, any of you guys can correct me if wrong, that had written off some old component, and they're like, hey, we're not going to sell it. And then they sold them for a nice contract. And we're seeing that like again and again and again. A100s is like, you know, it doesn't seem that much because it's like, 2020 to 2026. If you're not in technology, you don't understand GPUs, that's ancient. That's like signing LeBron James at 50 and saying, okay, like he still has value. And to your point, Tanner, it's probably the same rate, if not even a little bit higher than what they previously had, which is through 2029. And like with the supply crunch, like they reiterated what every other company in the space is saying, is that the demand is just through the roof. And so it wouldn't surprise me if again in 2029, there you go, Nate. Yes, it's in 2029, if they, again, maybe not for the same price, but maybe around the same price, the exact same thing. And the biggest thing is it's usually like in the past, a few years ago, they're like, yeah, 3 years is a depreciation cycle. And Michael Burry and other bears are like calling foul because they're saying, oh, you're extending it. You're just doing financial engineering. Not when customers are like, dude, give us these A100s, give us these moribund or what should be moribund units because the demand is so through the roof. We just need inference however we can get it, and we will pay you top dollar for it. Like that is, you don't need anything else from the call. You just need that. But like again and again, like they people criticize Coreweave because they're like, hey, these guys are like just financial engineers at the top and they don't really know engineering. Time and time again, like they're first to market, they're first to be able to get the validated stacks of Vera Rubin. And then you see the benefit of the financial engineering stuff because of what they've been able to do with supply chain. Again and again, they're on time or ahead of time. That's not by coincidence. Now, there's a cost to that because of the pricing floor with some of these things. The contracts, they're shifting towards the lower end. Like Jose said, I won't touch too much on that. Very good for margin. Yeah, there's a cost to that. So like they raised everything, including the CapEx, because they're ahead. They saved 1.1 billion too as well because of the financing. So it's just like, this is, I thought it would be a good quarter. This is a freaking blowout exclamation mark quarter. Now, tomorrow CPI, Nebius earnings, they could shift the price. What we're seeing right now might not be what we see today, up or down. But no matter what the price is, man, great quarter. Fantastic.
Blowout exclamation mark quarter. Neil, what did you think? How can you add to that?
I cannot. No, but it's, I mean, yeah, the interest, the debt, it's 1.1 billion annualized for now, right, in interest payments. So that's good. The A100 story is good. The managed inference business, so they went from $1 million to over $100 million in ARR in just one quarter. They're guiding to at least 250 million ARR by the end of the year. So that's great as well. Margin is expected to keep expanding sequentially, reaching low teens by Q4. Also good. CapEx has been raised. When they talked about CapEx being raised, stock did drop a little bit, but it's back to being up 13% right now. So not an issue. So yeah, I mean, they are doing everything that they need to do. Active power has been raised as well. Jose was very happy when that was mentioned, to over 1.85 gigawatts by end of year. And they're still expecting over 8 gigawatts of active power by 2030, which is for 4 years from now. And what SpaceX wants to be closer to 10 next year, at the end of next year.
On the higher end of 10, between 5 and 10 on the upper range of 10.
Okay.
But that's actually what I was going to bring up as well. SpaceX, I think they have 1.4 gigawatts of active power right now at the end of Q2. Coreweave just showed 1.5 gigawatts. It's wild, the price differentiation between these two businesses. Obviously, there's a wide range of different products that SpaceX also offers. But whenever you look at the TAM being heavily in favor of the AX business or AI business versus the space business, it really goes to show you that Coreweave is like, calling them a neocloud is a disservice to what they actually are. They are the fourth hyperscaler.
Well, fifth.
Fifth.
Yeah,
Let's not forget about Oracle.
Yeah. But still, Coreweave, 112% growth this quarter, likely to accelerate going forward as most of that power just
over
came on.
150 next quarter. Over 150% growth next quarter.
Yeah, because 300 megawatts came on in June alone. Like, that's pretty wild. Is there anything else that you guys wanted to say on the call? Stock is up 13.2%. Lumentum and SMCI, Kava as well, also green. It was a bullish quarter or bullish day for earnings results across the board.
Yeah, the stocks are going to continue to be very volatile there in this space, and you're going to hear just a whole lot of talking points from both sides. But make sure that you pay attention. Like, it's one thing to say and have these assumptions and stuff, but when you hear like this is what we delivered. These are real contracts. This is a real thing with the A100s, rather than, well, it might be, and like that's so important. And then just adding to what you mentioned as far as the scale of CoreWeave, probably my second favorite quote was when they said, put that in perspective, the adding 500 megawatts. We added more power in Q2 than any single NeoCloud operates in total today. It's a different scale.
Yeah, until tomorrow morning, though, probably. Like,
yeah, I was gonna say Nebius. So,
you know, it's like whenever Palantir highlighted that they had a higher rule of 40 than Nvidia. I'm like, you have 2 weeks. You know, you enjoy it, and then don't shake your head, Roy. It's happening. It will.
Oh, I'm an Nvidia shareholder. I'm fine with it, dude. I'm in both. So you're in both now too. So
yeah. But I don't know why names like Nvidia's up 0.2%, but I think the A100 story that they just talked about, this should be massive news. People don't understand. Yes, Nvidia is not seeing recurring revenue from this. They don't benefit financially that way. But what it allows customers to do is make a bigger investment, knowing that the lifetime value of those GPUs is not going to be 18 months. It's not going to be 3 years. It might not even be 6 years. It might be closer to 10. And that is an unbelievable amount of pricing power on these GPUs that then NVIDIA can then charge for future architectures, which is why the average price of the Blackwell is higher than the average price of the Hopper. And it's why Vera Rubin is likely to come up, 60, 70% higher in their average price versus Blackwell. The prices are rising because the utilization of the chips are rising, and the revenue that you can generate from each chip is rising for the NeoClouds that are actually putting them in their data centers.
Yeah, let me add one more just on what you touched on there. People were saying, because Vera Rubin was out, and yes, Coreweave and Nebius, they're kind of first in line, along with a few others for that product, and it's going to do very well. They talked about it there. There were bears saying, oh, well, Blackwell, which is the most recent next to Vera Rubin generation, they're worthless because the Vera Rubin comes out. That we're talking about A100s still having great value that are much older than Blackwell. So it's like the bears are just wrong. They're I mean, there are some points that they bring up where it's like, yeah, it's worth considering, but like they are so offsides. They don't understand what's happening. They're not paying attention, or they're time travelers from 2020.
Or they know better than KPMG, Ernst & Young, Deloitte, and all the big accounting firms. Because
Jose Najarro.
Listen, they're the ones signing off on the depreciation on the audited returns.
You guys think you know more than Jose?
Definitely
no
not.
Way. No way, Jose.
Not going to happen. But are we wrapping there, ladies and gentlemen?
What's the final number on CoreWeave?
We're at 102.41.
Let's go.
It's going to be looking good for you in the draft.
Oh, yeah, baby.
Let's see where it opens tomorrow. I mean, anything can change, but I can't imagine that like I saw Roy post this in the comment section, there's going to be a flurry of upgrades tomorrow.
Congratulations to everybody that was buying down the 60s and 70s.
Yep. I will say thank you to Jose for getting me involved in this name. And Steve, you can now say thank you to me, and you're welcome. And that's,
I owe you 2 thank yous.
I don't make up the rules. It's the chain of command.
Listen, thank you for NVIDIA and thank you for CoreWeave, because you made me see the light.
Mwah. And I appreciate you giving me QXO, and I'm losing money on that. But you've had good picks in your days. No, I'm kidding.
That's a long-term one.
Obviously, this man's been a big part of me getting into names like Google and Amazon and all the other boomer stocks that I hold.
If those are boomer stocks, we have a problem.
Well, I don't hold anything more
we have
boomer
a
than
big
that.
problem if Amazon and Google are boomer stocks.
Well, I'm not holding Realty Income. Okay, I'm not holding Enbridge.
You may want to.
I might. I'm
that
getting older,
monthly dividend income's quite nice.
I feel it in the knees. I'm gonna start building a dividend portfolio.
The day that happens, oh my God.
It's gonna be a long time. I'm gonna be one of those old men that try to fit in with the kids. What's up for Shizzle? Always trying to invest in in the young growth names that are keeping things fun and exciting. All right. I hate the way this is ending and the silence after that joke. Okay. I will,
There
just
was a
end it
much
here. Thank
better
you all so-
joke in chat, which Jose actually put in the private chat.
What?
Someone posted circular tanking. When you tanked Jose and then you tanked.
Got you.
Circular revenue.
Circular thanking, yeah. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. Hopefully you guys are happy with these results. Till next time. Bye for now.
Later, everyone.
Later.